All right. Thank you so much for joining us. My name is Greg Lewis, and I'm going to take my headset off because I don't need it right now. I am the marketing manager for Metastock Software, and today is a special event because today is the Global Online Active Traders International Summit. The acronym for that is G.O.A.T, G-O-A-T, which many of us here in America know that's often used as a sports reference to mean greatest of all time. Today it means Global Online Active Traders. And of course, I suppose any of these guys could be the greatest of all time at some point. You know, Bobby's only, like 15. He's got 60 years to become the greatest trader of all time. But anyway, thank you for coming. It's great to have you here. I'm coming at you from our Studio Texas satellite studio down here in Texas. Bobby Hiller is coming at you from Salt Lake City, Utah. And our very first speaker, Zaheer Anwari, is coming at you from London, I believe, or somewhere in the UK. Daniel Senegi, who's up next, will be coming at you from, I believe, Vancouver or Montreal, somewhere in Canada. Bobby Hiller, again, will be speaking later. He's coming from Salt Lake. Bradley Gilbert from Australia. And I believe Daryl Guppy, who is our last speaker today, will be coming at you from Singapore. So it truly is an international event. So good morning, good evening, good night, wherever you are. I hope things are finding you well as you're joining us here now. Now, I can see that there's many here already, and say hello. Hey, there's Vincenzo from Italy. Again, did I say it's international? It's so international. When you come along and come online, go ahead and say hello. Let us know where you're from, and make sure just to give us a shout out. All right, some things I need to check real quick. Okay, talked about me, talked about Bobby. Oh, we are Metastock. I'm sure you've heard of us. We're the purveyors of a trading system and software and data for active traders, self-directed traders, just like yourselves. And we are really pleased right now because we've just launched Metastock version 19. That was about 2.5 weeks ago. And we will be talking about that today. Hello, Kelly Clement. I'm sorry, being distracted by messages. Okay. We will be talking about Metastock 19. The person that will be talking about it the most will be Bobby Hiller in the third presentation, so make sure you stay tuned for that. A couple other things about Metastock 19. We have a special Metastock 19 tour coming out right now, and if you want to find out more about that, they're visiting locations in Canada and the USA. And if you go to metastock.com/seminar, you can see the remaining events. We've already had several. I went to Vancouver a few weeks ago. We've had them in Los Angeles, Santa Ana, Dallas, Houston, a couple of other places. So here's the places that remain. This weekend actually is our biggest weekend because we're going out to 6 places all at once. So here's the schedule. Go to metastock.com/seminar and check it out there. And I was just going to show you a video of Metastock, but I realized I came on a little too late to do that, so I guess I can't do that. Other things. Oh, so if you would like to know more about Metastock 19, we have a bespoke online live webinars dedicated to that. If you go to metastock.com/seminar, metastock.com/webinar, you can see which ones are coming up. I want to say Jeff's doing one this week, or maybe Bobby. I can't recall. But just check it out, metastock.com/seminar. When I get done with this little intro, I'll type all this stuff into YouTube so that you don't have to kind of figure out where you're going. All right. Anything else? I don't think so. So again, we're starting here in about, how many minutes? We're starting here in 2 minutes. I feel like there's something else I really wanted to tell you again. Oh, well, here, let's look at today's schedule, actually. I've got it somewhere. I'm certain of it. There we go. Let me put that right here. So, oh, that's not it. Give me a second, please. Let's just put that right over there. Okay, so this is today's schedule. First up will be Zahir. Next up will be Daniel Sinig. Next up will be, sorry, this is hard to control for some reason in the software, Bobby Hiller, then Bradley Gilbert, and finally Daryl Guppy. 5 speakers today. I know you're going to enjoy it. They've all spoken with us before. They're all come to us with great acclaim. All right, we have about a minute left. I can't think of anything else I need to tell you except, oh, what am I thinking? Go ahead and like and subscribe. We would really appreciate that. We're upwards of about 70,000 followers right now. And let's see, got 52 seconds. When you like, subscribe, and hit that bell, then you'll be notified whenever we have a live event. We have live events like this just about once a week. Actually, we have live events like this about once a month, where it's extended multi-hour events. We have multi-day events about once a quarter, and then full-day events about once a month. Anyway, I've got about 32 seconds, so I'm going to stop yammering and make sure Bobby's okay. I'll let you listen to some jazzy music, and thanks so much again for joining us today.
All right. Hello, everyone, and welcome to the G.O.A.T Summit. If you're not familiar with the term G.O.A.T, well, for today, it stands for the Global Online Active Traders Summit, but it's kind of common out here for it to also stand for the greatest of all time, such as, you know, Michael Jordan in basketball or Tiger Woods in golf. The G.O.A.T Summit, that's what we're here for today. We have speakers and presenters from all over the world that are coming here today to kind of talk to you guys about trading and different ideas around that, and just to provide a lot of education for you all. So we're really excited for it. We're hoping to do some more of these in the future, and the plan is, well, everything kind of should still pertain to all markets. So regardless of where you're tuning in from, whether, you know, it's the morning time for you or evening, etc., you should have something to benefit from today. Now, before I dive too deep into things, I do quickly have to read our legal disclaimer for you. So this demonstration, it's designed to instruct you on using Metastock and accompanying software plugins, and it's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. And Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. All right, and now that we've kind of got that out of the way, I do have a quick schedule put up here for you. If you're already with us right now, you probably saw this in your email earlier or something of that nature. But first up, we're going to have Zaheer Anwari, and then we're going to have Daniel Sinig chiming in after that. Then I'll be doing a demo today, showing you guys some of the new things inside of Metastock, showing you how you can easily find some different trades and things of that nature. Then followed up after me, sorry, is going to be Bradley Gilbert, and then Daryl Guppy after that, closing out the session for today, or, you know, starting the morning over in Australia. If you're watching on YouTube right now and you haven't actually registered for the event, maybe you just saw that, hey, Metastock is currently going live on YouTube. Well, you can go to metastock.com/international-summit and register for today's event because most of the speakers actually have some free bonus offers that they're giving away to those that register. And there's still time to take advantage of that as long as you go register right now at metastock.com metastock.com/international-summit. If you're not familiar with Metastock, we are the ones kind of sponsoring and hosting the event today. Metastock's been in business for near 40 years now, since we really were established back in the Equus days. And Metastock can allow you to kind of scan the markets, test out different trading strategies. It allows you to do a lot of technical analysis, as well as we have like fundamental analysis and news and things of that nature as well in our Metastock Zenith platform. But you can get Metastock starting as low as just $59 a month for the software and data, and we'll even give you 3 months for the price of one if you wanted to try it out. And you can get that trial offer or learn more about today's session, or come back and find a recording of today's video as well at metastock.com/summit-savings. And now that I've kind of got that out of the way as well, I do want to give a big hello to Zaheer Anwari. Zahir's been, partnered with us here at Metastock for a couple of years now, but he's been someone I've been talking to a lot and interacting with a lot, someone who I've learned so much from in just the last couple of years. I try to get him on to speak as frequently as possible, just because he does such a fantastic job. And I think you're all going to be real excited here to be able to learn everything that he has to share with you. And with that, I'm going to go ahead and say hi, Zahir, to you. Can you hear me? Are you tuned in still?
Hi, Bobby.
Hey, fantastic. So I'm going to kind of let you take over from here and do your thing.
Right.
I know you know what you're doing here, so I'm going to get out of the way, but I will be available if you have any questions. I can also help chime in any questions that might come in on YouTube as well, if you'd like.
Fantastic.
All right, so should have just had a pop-up asking if you want to present.
Okay, you should be able to see my title screen there.
Yeah, I see the Market Advantage Toolkit, Discover.
And I'm just going to switch over to Metastock as well, Bobby, just to test. Can you see that okay as well?
Yep, and now I see your Metastock.
Fantastic. Okay, brilliant. Okay.
All right, well, yeah, it's all you. I'll get out of the way.
Yeah, brilliant. First of all, thank you, as always, to Bobby, Metastock, and everyone there at the team. They do a wonderful job. Not just putting these events together, but all the customer support that goes on at the back end. It's just second to none. So it's always a pleasure to be invited on to do these presentations and to show you the power of not just what we've created, the add-on, but Metastock in general. It really is a wonderful, wonderful bit of kit. So if you are already a subscriber of Metastock, keep doing what you're doing, learning to use it, get better. If you are on here for the first time, I highly recommend at least starting on the trial, because without Metastock, I really couldn't function in terms of the stocks that I find for my portfolio. And that's what I'm going to share with you guys today. The title is the Market Advantage Toolkit, Discover Overlooked Stocks, Create Wealth Beyond the Media Hype. Now, what are we going to cover today? Well, we're going to have a look at the S&P 500, because that's really the starting point for everything. We'll then move into the Market Advantage Toolkit, the add-on that we have developed with Metastock. Do a real deep dive into how that works, how it operates, and how I use it to find the stocks that make it into my portfolio. And then we'll end up with a Q&A at the end. Bobby, if any questions come in during the presentation and you feel that they're timely questions, then do feel free to jump in at any moment. Okay, so with that said, let's jump straight across to the Metastock platform. This is the S&P 500. Now, this 4-screen setup that you can see, this is part of the Market Advantage Toolkit. This is how I do my analysis every single day. What I'm looking for is multi-time frame alignment. It's a bit of a mouthful, but ultimately what I'm looking for is time frames to be moving in the same direction. I'm a trend follower. So what I'm looking for are the large moves in the market. And for me to find the large moves in the market, I need the higher time frame. So I've got the monthly time frame in the top left. I've got the weekly time frame in the top right, and I've got 2 daily time frames, bottom left and bottom right. We can ignore the daily time frame in the bottom right for now. We'll come back to that in a second, but I really want to focus on the monthly in the top left, the weekly in the top right, and the daily chart in the bottom left. As I said, I'm looking for multi-time frame alignment. I want to see all 3 time frames moving in the same direction. Now, I start with the S&P 500. The S&P 500 is your market indicator, it's your thermometer, your barometer, however you want to look at, of the stock market. So if the S&P 500 is bullish, then we can assume the stock market as a whole is bullish. If it's bearish, as it was in 2000 when we had the tech bubble burst, and then again in 2008 when we had the financial meltdown, when the S&P 500 and the indices in general are bearish, then we're in a bear market and we look for shorting opportunities. And if we just have a mixture of factors, some bullish factors, some bearish factors, then we stand aside. And typically I will then look for opportunities in other markets, being commodities and currencies. So let's start with the S&P 500, and I'm going to start with the monthly time frame. Now, something that may have happened to you guys last year was that you may have fallen foul of this bull run that happened. We know that since the low of October 2022, the S&P 500 has climbed a whopping 45–50% since this low point right here. Last year, 2023, if you look at the sort of predictions that came out, all the sort of analysts, the top analysts from all the banks that we know, they always release their predictions. And more often than not, these predictions have a long history of being wrong. And you have to question why. Why did these analysts keep on coming out with these predictions? Why did they end up being wrong? The reality is that often these predictions are nothing more than a distraction to what is actually happening. And so 2023 is a very, very good example of that. When everyone else thought that the market was going to keep on crashing, the S&P 500 kept on rising. And it all started, guys, if you remember at the start of 2023, it all started with the talk of failing banks. You remember that? Failing banks were plastered all over our media channels. But if you go to my LinkedIn, if any of you follow me on LinkedIn, I'm quite vocal on LinkedIn. I've been recently awarded a top voice on LinkedIn with all the content I'm putting out. If you go back to my content at the end of 2022, start of 2023, I mentioned that at this point we could start seeing a rally, and there's a very specific reason for that. We're going to look at it on the weekly time frame. But what the S&P 500 is doing now is that it is rallying, and what I mean by that is it's printing new all-time highs. Now, the S&P printing new all-time highs is not actually anything new. The S&P 500 has been printing new all-time highs. If I just compress the chart to bring in as much data as possible, the S&P 500 has actually been printing new all-time highs going back to 2013. So this was the bear market of 2000 when we had the tech bubble burst. Then we had the recovery. Then we had the financial meltdown around 2008. And then since the low of 2009, we've been on this huge bull run in the S&P 500, massive bull run, 600–700% bull run. But in terms of all-time highs, the S&P 500 has been printing new all-time highs since 2013. And most recently, it's been printing new all-time highs since January of this year. Often when you see the S&P 500 printing new all-time highs, again, the media is loaded with panic. But why? Why is there so much fear-mongering going on? We have to always question this. And when I started my own personal investing back in sort of 2007, 2008, I regularly got caught up in all of this sort of noise and mayhem, and my portfolio performance really suffered. So I took a step back, separated the two, started learning to use the technology that was available out there, scanners. At the time, I was using things like eSignal before graduating to Metastock and learning about Metastock and its capabilities. Now we also have other charting platforms. A lot of them are good. A lot of them are okay. Some of them are pretty average, and as I keep on saying, guys, Metastock is just, it cannot be beaten for its functionality. So when I started separating what is happening in the charts from what was actually happening in the media channels, I started making much better decisions. Now, the fact that the S&P 500 is printing new all-time highs, that's a very positive sign that we're in a bull market. and we're likely to see the S&P 500 continue towards 6,000, which is that next major level above price action. So I'm just going to open up the weekly time frame now. I'm going to compress the chart just to bring in a little bit more data. And if we look at the S&P 500, it's a little bit clustered here, guys. But if you can just focus on where my mouse is, this black line going across the chart, that is the 200 simple moving average. The 200 simple moving average is a proven indicator of the long-term trend. If an asset is trading above the 200 simple moving average, it's bullish. Below the 200 simple moving average, it's bearish. Now, this logic comes from old school traders. They were very selective with the information they put on their charts because ultimately they were drawing charts by hand. You can imagine drawing hundreds of charts, updating hundreds of charts on a daily and weekly basis. It's a very long process. So they were very selective with the information they put on their charts. The 200 simple moving average they discovered was a proven indicator of the long-term trend. Institutions still use that logic today. Trend followers like myself, we use that logic. You know the expression, guys. If it ain't broke, don't fix it. The 200 simple moving average works very, very well. This decline, the decline that I mentioned in 2022, you can see that it came to the 200 simple moving average. This is when I went to my media channel, my LinkedIn, and I said, guys, we could start seeing a bounce to the upside and end to this 28% correction in the S&P 500. And around that time, our media channel started talking about failing banks. So it was very, I don't know if it's coincidental. We can go down the route of conspiracy theories, but we have to stay logical and unemotional at all times. Instead, we have to just focus on what is happening in the chart. When it came to the 200 simple moving average, we had a good bounce to the upside. And as mentioned, in January of this year, it broke out from this consolidation and has since been printing new all-time highs. Of course, this month, April, was a weak month. There was a correction, but that's okay. Corrections are healthy. We need to have them because that allows the market to settle, create a base, and we can then start buying back into the stock market. So that's the weekly time frame. Now, notice what we have also here, guys. Let me just reset my data. You'll notice that we have some colored bars. We've got the green bars when the market is trending. We have gray bars when we have a consolidation period, and we have red bars when the market is bearish. You can see right now that the bars have been green since November, telling us that we're very much in a bullish trend, even through this recent correction where it came to the 5,000, the 5,000 round number. The trend filter has remained green. That means overall, we're still in a bull market, despite this correction that the S&P 500 is going through. So you can see how having the right tools to your disposal are very, very important because it tells you when to apply patience, when to apply calm. Remember, there's the all-important trading psychology. This is where people tend to struggle, but ultimately a big part of trading psychology is just applying patience. When the market is correcting, pulling back, all we need to do is look at levels where it could pull back to, the 5,000 being an obvious round number. The trend filter, my trend filter has remained green. It hasn't turned gray or red, telling me that, all I need to do is apply patience. And we're now starting to potentially see a move back to the upside. So if the S&P 500 breaks out and starts printing new all-time highs, we are now in that next bull run through potentially at least up until summer. So we could see a run through May, June, July, and then August, September, October is typically when we have corrections and pullbacks in the market. And then we could end with the Santa Claus rally. So these tools are very important to align with that natural movement of the stock market. Now, here's a wonderful feature that some of you may be familiar with. If you're a regular user of Metastock, if you're new to Metastock, what's great is that within Metastock, we have programmed what is known as the expert commentary. So if I click on the expert commentary, what this does is gives you a breakdown of what is happening bar by bar. So you can see right now there's this red arrow, red upside down triangle pointing on the most recent bar, which is for April. However, if I move across, you will see that that arrow is changing and it's also changing color. So what happens is that the commentary which we have programmed. This is a dynamic commentary. It will update you bar by bar what is happening on each time frame through the build-up of the week and the month, through the build-up of the day, the week, and the month. So a wonderful sort of companion, if you like, helping you through using the analysis, using the tools, and making sure that you're aligned with the market and making the right decision. And this expert commentary is on every time frame. So that's for the monthly. If we go to the weekly, and then again, if I click on view and go to expert commentary, you'll see that there's commentary there for the weekly time frame, breaking everything down, telling you about the long-term trend, the medium-term trend, the short-term trend. Everything is within the commentary. And then again, for the daily time frame as well, if I open that up and if I go to view and expert commentary, it will tell you whether the market is bullish or bearish in accordance to the tools that are programmed on that time frame. So again, going back to that initial expression, which I was saying, multi-time frame alignment, multi-time frame analysis, within the expert commentary, it's guiding you along, making sure that you're aligned with what is happening day to day. And that's extremely important. Often you will hear the term defeat the market. I want to beat the market. If you come with this attitude of sort of wanting to beat the market, often people will fail because the market is vast, guys. It will often swallow you up and spit you out. You don't want to come with that mentality. Again, this is something that I learned in my early days. It's not about defeating the market. It's about aligning with the market. It's about allowing the market to dictate the direction, jumping on the back and piggybacking the ride. It's a far simpler process. It's far more profitable. And ultimately, it's a much calmer process. And I think that's really, really important because I'm sure all of you guys on here, you are business owners. You have jobs and careers. Maybe you're married, you have kids, you have a lifestyle. Maybe you go to the gym, you got hobbies, you got pets to look after. Ultimately, there's a lot going on in your life day to day. You don't want to give any of that up to be glued to a screen looking at candlesticks all day. Ultimately, what you want are some very smart processes in play that compound your money in a way in the background. All you need to do is log in, manage your portfolio using wonderful tools like Metastock, manage your portfolio in a few minutes a day, each day, and then ultimately get on with your life. And that's something that I created and developed because back in sort of 2007, 2008, in my early days, I realized that there was a lot missing in terms of having a complete system. And this is where the Market Advantage Toolkit came from. It's been a journey to get to this point. Okay, so this is the S&P 500, guys. Now, the question is this. The S&P 500, I don't invest in the S&P 500. I don't invest in tracker funds. Why? Because it's an average. If you invest in an average, you get an average performance. What I'm looking for are stocks that are outperforming the average, right? That makes sense. If the S&P 500 is an average, there'll be some stocks that are underperforming against the average. There'll be some stocks that will be matching the average. And then there'll be some stocks that are outperforming the average. If we can find those stocks, and you don't need a lot of them, I'm talking maybe 5, 10, 15, 20 stocks. If we can find those stocks that are outperforming the average, get them into the portfolio, hold them, compound them for as long as they trend, which is typically anywhere from 12 to 18 to 24 months, then take profit, go back to the scanners, scan the market again, find the next set of stocks that are outperforming the market, get them in your portfolio, and round and round and round you go. If you can do that consistently year in, year out for the next 10, 15, 20 years, this is how you will get a portfolio that will smash the performance of anything else out there. Typically, we sort of double an account every 2.5, 3 years. That's how the Market Advantage Toolkit has helped us in terms of portfolio performance. Okay, so the question then is, how do we find these stocks? How do we find stocks that are outperforming the markets? Well, first of all, I'm going to just close this down. Okay, so when you first open up Metastock, this is typically what it looks like. The magic happens in this P in the top left corner. This is the power console. So if I click on that P, this window opens up. And then you've got a number of options here on the left-hand side. If we click on Explore, now, this is where the real beauty of Metastock comes into its own. And you heard Bobby say that, you know, for 30 years straight, they have won an award in their category. Well, this is why, because in terms of the scanning capability of Metastock, it's simply It cannot be beaten. I've tried a lot of scanners out there in terms of the range of options and the flexibility and the dynamic scanning capabilities of Metastock. It's simply second to none. So I'm just going to scroll down because there's a lot that goes, a lot of good stuff that goes into the Explorers, but I'm going to go to our Explorers. So anything with MAT, you can see right there. These are all the Explorers that we have created for Metastock. You can see there's a ton of Explorers that do anything and everything that you're looking for. So today I'm going to keep it quite simple. And I'm going to share with you the main sort of scanners that I like to use, the main Explorers that I use day to day. Now, first of all, you'll notice there's a bunch of scanners here that all have UK. I'm based here in London. So, of course, the UK market features very heavily in terms of stocks that I look for. But the UK scanners can also be used for other small to mid-cap markets. So the UK scanners I also use to scan the NSE, the Indian stock market. We have a growing community in India, and I use the Indian stock market. I use the UK Explorers to scan the Indian stock market to find some wonderful, wonderful stocks. And then you'll notice also below that, if I uncheck this, you'll notice that below that I have the US stock market. Again, large cap markets, you can also use the US scanners to scan other large cap markets that you may be interested in investing in or already investing in. Now, also notice that we have scanners for breakouts. So if you look here, for example, you'll see that there's BO in the scanner. So we've got scanners for breakouts. There's another one right here as well. So we have scanners, Explorers that are finding stocks that are breaking out. And then we have a bunch of Explorers that are looking for opportunities that are pulling back. We've got long scanners. So when the market is going up, we can scan for long opportunities and we can scan for short opportunities as well. Again, for the US market, we've got long opportunities and we've got shorting opportunities. So we've left no stone unturned. We've literally have an Explorer for every eventuality. Now, here's the thing. There are really only two real entry points, if you like, that you want to scan for. It's either breakouts or pullbacks. But here's the thing, guys. Earlier on, I mentioned about being aligned with the market, being aligned with the seasonal movement of the stock market. There's this seasonal movement that people tend to either be unaware of or tend to overlook. So what I mean by that is typically, let's take 2023 into 2024. We had a very strong bull run at the end of last year, from the low of October through to actually the high of April. We had a massive bull run. So October, November, December, January, February, March, April, we had 6 months, 6 months of bullish momentum to the upside. In those times, the breakout scanners work very, very well. So anything with breakout, BO, those scanners work very well because the market is trending, it's pushing up, stocks are breaking out. So you want to use the breakout scanners. Now in April, we had a correction and we had a 5% decline in the market. So when the S&P is pulling back and correcting, stocks across the board are all pulling back and correcting. Again, it's a natural behavior to the stock market. How deep the pullbacks are will vary from stock to stock. Some pull back very deeply, some are hardly affected. They just create a mini base and then they keep on going. Now the S&P 500 is recovering and pushing up. We can start using both the pullback scanners and the breakout scanners, because what I'm looking for are stocks that are pulled back to support levels. So my pullback scanners are coming in. And there are also stocks that are now outperforming the S&P 500. So with the S&P 500 still sort of creating a base, it's pulled back to the 5,000 round number, it's creating a base. There are stocks that are already breaking out. I'm going to be sharing some of these stocks with you. These stocks are already breaking out, already printing new all-time highs. So we're finding stocks that are outperforming the indices. And those are the stocks that I like to have in my portfolio. I like to hold, I like to compound, I like to manage with a trading stop loss, and then rebalance when the time comes. So that's where the scanners come in, guys. As you can see, there is a scanner or an explorer for literally every eventuality. And you will get access to all of these explorers as part of the Market Advantage toolkit. Now, typically, if I scan the US stock markets, it may take sort of 10, 15 minutes. So I'm not going to do a scan right here live, but typically what I would do is I would choose whichever scanner I like to use. So let's say I like to use the one with R. That's my regular scanner that I like to use. And then I would go down to the North America list. And I would choose these three main lists here. All in all, you can see you're looking at 11,000, 12,000 stocks. That's a huge number, guys, right? Imagine going through that chart by chart by chart by chart, trying to find the right stock. It's a long process, an impossible process. This is where Metastock comes in. I mean, as I said, guys, without Metastock, I couldn't perform the way my portfolio forms. And remember, for those of you guys who have seen me present before, in November of last year, we had our hedge fund set up, domiciled in Luxembourg. Again, Metastock forms the foundation of all the stocks and assets that make it into our hedge fund. So this is really coming from a point of credibility now. Once you're into the hedge fund space, into that domiciled in Luxembourg, you are now entering the big boy league, if you like. And as I said, Metastock is really where it starts. Hit the start exploration, and then off it goes. And then typically what happens, I'll get a much more manageable list of, let's say, 200 or 300 stocks. And then I'll start working my way through that list using that 4-screen setup that I showed you earlier when I was going through the S&P 500. Now, what I'm going to do for you instead today is I'm going to share some of these stocks that have appeared over the last few days using this Explorer. Some of them are breakouts, some of them are pullbacks. We'll start with, and what I want you guys to note here at this point is, how many of these stocks do you actually know? I'm based here in the UK, so a lot of these stocks that come up from the US, which is where I invest 95% of my money, a lot of these stocks are often new. I've never heard of them before. And I look at their charts, I'm like, wow, these companies are giant companies. So here's a tip. Wealth is made from stocks not found in our media channels. It's down to you to go away and be able to find these hidden gems, because that's really where the money is. If all of these stocks were plastered all over the internet, everyone would be rich. So why do people have such poorly performing or underperforming portfolios, including myself in the early days when I was trying to gather momentum with all of this? I would always just invest in stocks that people were talking about. And then I soon realized that doesn't make sense. So I had to be able to understand and find these stocks for myself. And so this is where the Market Advantage Toolkit came in, how we developed the Explorers, the tools, everything that you see here. It's really been a journey to get to this point. So let's start with Amphenol. We'll open the chart up, and it's, as you can see, we've gone straight into the 4-screen setup. And I'm going to open up the monthly time frame. Now, first of all, guys, notice, look at the history of performance. I like to look for stocks with at least 5 to 10 years of history, because if a stock has at least 5 to 10 years of history, then I can look at that history and I can see how well it's performed in the past. And if a stock has proven performance history, then it's very likely to perform well in the future. See, I'm instantly trying to stack all the odds in my favor. From the moment I start scanning the market, looking at the S&P 500, going to the Explorers, scanning the market for the criteria that is in the Explorers, getting that initial list from the Explorers, opening them up into the 4-screen setup, and then manually working my way through the list. What I'm doing is I'm constantly trying to stack the odds in my favor, so that the moment I pull the trigger and risk my hard-earned money, I know that I have way more chance of making a profit than a loss. That is your edge. This whole Market Advantage Toolkit is your edge. It's a defined edge. And here's the thing. If you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. Now, often I will ask people, what is your edge? And they will say things like, oh, my risk management or my psychology. This isn't your edge. These are key elements of trading or investing, but an edge is being able to identify high probability assets that have more chance of making a profit than a loss. And there's no better combination than through scanners and using charting tools to be able to develop your edge. Now, what I'm looking for in terms of my edge is what I call the 4PS method, the 4-phase sequence method. And that works really well on the monthly time frame. First of all, phase 1 is a proven performance history. So we can see Amphenol has a proven performance history. We're looking at the monthly time frame, guys. Good uptrend. Phase 2 is a consolidation. Now, you know the expression, the longer the consolidation, the bigger the breakout. Often people hear these expressions, they know it, they can regurgitate it, but they don't really know how to act upon it properly. I like to look for a consolidation of at least 3 to 6 months minimum. The longer the consolidation, the bigger the breakout. So if it goes on for 1 year, 2 years, 3 years, that's even better. I mean, if we look at Amphenol, the high was created in December 2021, and the breakout happened in October 2023. So you're looking at almost a 2-year consolidation. And then if you look at the breakout, October, November of last year, it happened around $88, $89. We're now trading at $121. Amphenol is in my portfolio. Again, if you go to the commentary view, expert commentary, you can see that the monthly chart of Amphenol has been bullish for the last 6 months. It's telling you, everything is there in the commentary. It's guiding and telling you what is happening chart to chart. Okay, then we go to the weekly time frame. I'll open that up. Now, the weekly time frame, very straightforward. If you have a look at the trend filter, it's green. We can see that, first of all, it's broken out through this consolidation that I mentioned earlier, 2-year consolidation. The trend filter has been green. It's been pushing up. It's above the 50 SMA, which is this orange line. It's above the 200 SMA, which is the orange line. And I also want to direct your eyes to what's happening down here at the bottom. Can you see there's a ribbon that says bullish? So it's telling you when an asset is bullish or a stock is bullish, it's telling you that all the factors are aligned and we are seeing a bullish stock right here. And again, it is in the expert commentary. So not only do we have it in the expert commentary, you can see that the weekly chart of Amphenol has been bullish for the last 26 weeks. It's all programmed in there telling you when the stock is bullish, bearish, consolidating, when you want to stand aside. It's all there for you, making it very sort of straightforward and simple to learn, to understand how to find and pick and invest in these good stocks. Again, on the monthly, I just missed it there, guys. You can see there's a green ribbon telling you that the monthly time frame is bullish. So what we're having is a bullish monthly, a bullish weekly, and then if we come down to the daily time frame, we also have a bullish daily time frame. The trend filter is green above the moving averages, the 20, the 50, and the 200 simple moving average. What we have here is multi-time frame analysis. We also have a subchart indicator here, which we've developed. It tells you how linear the trend is. Linearity is very important. What linearity means, like a very clean looking trend. If you look at this trend in play, you can see how it's supported by the 20 and the 50 SMA. This is what you want, is in a clean trend. Nice looking momentum to the upside, which is made up of pullbacks, breakouts, pullback, breakouts, pullback. That's what a trend looks like. You can't expect green bar, green bar, green bar, green bar. There's periods of bullishness, periods of bearishness. You want that throughout the lifetime of a trend or a stock that's in your portfolio. So this is, Amphenol is a good example of multi-time frame alignment. When we have the alignment, this is when I go to the daily in the bottom right. The daily in the bottom right, if I open that up, is my strategy time frame. This is where you will find entry points, stop losses. You will find target levels or compound levels. When I say target levels, we don't have target levels where we take profit. That's more of a day trading mentality. We like to follow the mantra of cut your losers short, let your winners run. So if we're in a winning asset, why would I want to take profit? Why would I want to take profit at 1-to-1 or 1-to-2 when I could potentially take profit at 1-to-10, 1-to-11, 1-to-12, 1-to-15? Cut your losers short, let your winners run. The way to do that is to allow the trend to develop and then have strategic levels where you can keep adding more of that asset into your portfolio. So in the daily in the bottom right, you have all of these entry points. You can see the diamonds that are highlighting entry points. The bars also turn blue when you have multi-time frame analysis. So when the monthly, the weekly, and the daily are all aligned, you can see that they all turn blue. Now, when the market starts pulling back, the blue disappears. But if you go to the pullback page, at the moment we're using the breakout page, but if you go to the pullback page, the bars will be purple during periods of pullback. So again, you've got everything telling you if the breakout page stops aligning, go to the pullback page. So you've got something there for every, as I said, every eventuality. So you've got entry points being marked. So let's say you buy at that first diamond, and then your strategy says that every third diamond, I'm going to buy more. So first, second, third, there's your third diamond. You can start buying more of this into your portfolio. 1, 2, 3, there's your third diamond. Start adding more into your portfolio. 1, 2, 3, third diamond, you can start adding more into your portfolio. Now we're at the first diamond. We're waiting for 2 more diamonds. If we get 2 more diamonds, you can add more of Amphenol into your portfolio. So there's all of these little tips and techniques that you can use to really accelerate the profit of a winning trend. And then more importantly, guys, if you see this red line at the bottom, this is our trailing stop loss. Look how well the trailing stop loss works. The trend started in the low of October 2023. This red line has not been hit since then. Even during these corrections, look at the pullbacks, guys. The pullbacks haven't hit this red line. Typically, that trailing stop loss will keep you in a winning trend, as I've already said, for 12, 18, 24 months. They've all been calculated to keep you in positions for as long as possible. Again, everything is explained in the expert commentary. Everything that you need is here. Entry points, stop losses, risk management, trailing stop losses. Here at the bottom, subchart indicator, you've got a histogram, which is made up of green, gray, and red bars. This tells you the quality of the breakout. So if you have a diamond and a green bar, that means you have a very strong breakout. If you have a diamond but a gray bar or a red bar, that means you have a weak breakout, in which case you may either want to stand aside or you may want to reduce your risk. Typically on a good breakout, I risk 2%. Maybe on a weak breakout, I may stand aside, I only risk 1%. So all of these factors are there for you to learn to use and to really sort of help you put a strategy and a process together. And it all starts, guys, I cannot emphasize this enough. It all starts with being able to find these hidden gems. If you cannot find stocks like Amphenol, your portfolio will always underperform, because all you're doing is you're going online, looking at what people are talking about, seeing what analysts out there, your favorite analyst is telling you. Remember, analysts are analysts, they're not investors. Most analysts have no idea how to invest. They're just paid a salary to talk about certain stocks. You have to kind of step back away from that and go, well, I need to find a process that works for me that first starts with finding these hidden gems. Okay, so that's Amphenol. Let's move on. Let's move on to another stock. The next stock is Boston Science. Again, I think this is a healthcare stock, if I remember correctly. Guys in the US, you will probably be aware of Boston Science. It wasn't a stock that I was too familiar with until it came up. And then I believe we may even have some branches here in the UK. I could be correct on that, incorrect on that. But from what I read, I think there is a Boston Science here in the UK. But again, look at its performance, guys. 2012 to 2019, that's a 7-year bull run where it went from less than $10 to just under $50. So it 5x'd in that time. Then it went through this consolidation. Remember, guys, the longer the consolidation, the bigger the breakout. So you got consolidation from 2019 through to 2023. So that's a 4-year consolidation. And since then, it's gone from around 50, just under $50, around $45 to $72. This green line here is the highest point of last year. This is crucial. Any asset that's trading above the highest point of last year is likely to continue going up. Stocks that are trading below the low of last year are likely to continue going down or are in some sort of bearish territory. PayPal is a really, really good example of that. PayPal has dropped like 70%, and I still see people buying PayPal, which for me is crazy. PayPal is only heading down. Why are you buying PayPal? You want to be buying stocks that are already moving up. You just need to learn to time your entry, and the correct entry is getting in at that breakout from a long-term consolidation. Buy high, sell higher is far more profitable than buy low, sell high. You look at performance tables, Warren Buffett is just mid-table. A lot of his wealth comes from dividends. He's not actually very good at picking stocks. You look at the top of those performance tables and you've got people like William Eckhart, Richard Dennis, trend followers, people who've got a phenomenal story of picking the right assets for the portfolio. So buy high, sell higher is more profitable, certainly when you're looking to grow your wealth. Then later on in life, when you get closer to retirement and you want to have a more sort of dividends-based portfolio, you can then switch to a more sort of Warren Buffett style of investing. But in these years where you want growth, it's not about dividends. It's about growth stocks, and buy high, sell higher is really where you want to focus. So looking at Boston Science, you can see, guys, bullish. Looking at the ribbon here at the bottom, it's bullish. Go to the weekly, it's bullish. Go to the daily, it's bullish. All three time frames are bullish. So we now need to go to the daily in the bottom right. And as I did with Amphenol, I'll just compress it. You can see, look at the trend filter. It's blue, telling us that we've had multi-time frame analysis, alignment rather, since November of last year. Look at all the entry points, these green diamonds, and look at the gap up. Last week, there was a lot of talk around Meta, because Meta had dropped 13% on earnings. But Meta is just one stock. Yes, it's a big stock, and Meta is Meta. But Amphenol on the same day, I believe, or the day before, actually gapped up like 6% on earnings. So if you just focus, I mean, and I'm telling you this, guys, as someone who is a regular on social media, you really don't want to get caught up in all the talk on social media, because it's not going to help you. You want to look at what's happening on social media, have a little giggle, and then turn to Metastock to find the actual stocks that are meant to be in your portfolio. So Boston Science, really good example of a stock that's outperforming the market. Okay, let's move on. Now here's a real giant of a stock. Pfizer, I think hopefully I'm saying that correctly. Pfizer or Pfizer, Pfizer, it sounds more right to it. Look at it, guys. I mean, look at its performance from 2012 through to the high of 2020. This stock went from around $14 through to $120. That's a massive run. It then created this base, and that base was from 2020, February 2020, through to the breakout, which was sort of December of last year. So you're looking at a 3.5, 4-year consolidation period. And now it's on its next leg up. So when I entered, it was around $130-ish. It's now $153. And this is only just started. Looking at its history, you can see that when it trends, it goes for many, many months, many years. So this is very early on in its trend. Again, look at what it says, monthly time frame, it's bullish. This is a bullish stock. On the weekly time frame, it's bullish. And on the daily time frame, it's now bullish. It's gone through a bit of a correction. It went through a bit of a correction, but it's now bullish. If we go to the daily time frame, and if I compress the chart, okay, look at the filter. The filter was blue, telling us multi-time frame alignment since November of last year. And as I mentioned earlier, the S&P 500 went through a correction. So Pfizer with the S&P 500 went through a correction. It's now formed a base, and it's now looking for the next breakout and the next move up. It also had a positive earnings reading. You can see there it was a gap up on earnings, and it's now just sort of forming a mini base, and it's the next breakout now that we're looking for. Next one is Lois. I think that's how you say it. Again, if we look at its history now, this one's a bit of an interesting stock. It performed very, very well going back to 2004 through to 2007. This was that 3-year run. Since then, it's actually just been in this massive consolidation, huge consolidation. Again, longer the consolidation, the bigger the breakout. So this consolidation really lasted from 2007 through to 2000 at the start of January 2004. That's a massive, massive consolidation. Now it's printing new all-time highs. You can see that the ribbon is telling us it's bullish. If we go to the weekly, it's bullish. If we come down to the daily, it's bullish. Like all three time frames are aligned. If we open up the daily time frame, and if I just compress that to get more data, you can see that the alignment came in, the multi-time frame alignment came in again in November. There's a pattern going on here. A lot of stocks had their alignment around November. We had a run. We're now going through a correction because the S&P 500 has gone through a correction. We're waiting for the next breakout. And that next breakout is likely to take this stock to $100, $200, and so on and so forth. Okay, I'm just aware of the time. I want to get some questions in. Let's just have a look at a couple more stocks. I'll be a little bit quicker here. Mastercard, just looking at the monthly time frame. I mean, again, a real giant of a stock. We know it's a giant of a company. Its stock often gets overlooked. You can see what I mean by buy high, sell higher. Is a very profitable endeavor when it comes to Mastercard. Bullish on the monthly, bullish on the weekly, bullish on the daily. It is going through a bit of a prolonged correction, this one. Again, you can see the alignment going through a correction. It's forming a base. Bases are good. It's healthy. Next breakout, particularly above $500. And you could potentially see Mastercard move through to $1,000 over the next 12, 18, 24 months. Don't discount how far a stock could go. If you look at Nvidia is just short of $1,000. Amazon, before it splits, I can't remember what it was, maybe like $2,000 or $3,000. Chipotle, Mexican Grill, I think that's like $3,000. There's talk of it going through a 50-to-1 stock split. So don't dismiss how high a stock can go, and don't even sort of predict or guess. Just let it go and follow with your trailing stop loss. Keep it simple. So Mastercard is another one to potentially keep an eye out on. We've gone through the S&P 500, and the last one that I want to go through is TSCO, Tractor Supply. I know I did a bit of a research on this particular stock. They have something like 2,000 stores throughout the US. They started off as a mail order company for tractor supplies. Now they're kind of like a Home Depot where you can get everything for your garden, for your pet. But look at their stock. Really, really good performance history, particularly post-coronavirus. You can see that it went from $50 to $250, created that base, that phase 2 that I talked about, and now it's phase 3 into phase 4, and it's now starting to trend. TSCO is one that I recently added into my portfolio. Weekly is bullish. You can see it's really just started its breakout from this consolidation. Daily is also now aligned. So monthly, weekly, daily, all are aligned. So if we go to the daily in the bottom right, you can see that the bars have only just started turning blue again. They were blue previously, but they've only just turned blue again. This stock potentially could go to $400, $500 plus in the next 12, 18, 24 months. So, you know, you have a handful of these stocks in your portfolio, hold them, cut out of the ones that don't work for a small loss, typically 1% or less, 2% or less, and then hold and compound the winners, and just repeat that process through the scanning and whatever stocks that the explorers are finding for you. Keep on holding and rebalancing. There's a real art to this, guys. It's a very, very simple process. The best techniques are simple to learn and execute. Where people tend to fall short is the resilience and the consistency needed, always bouncing from one strategy to another, usually short-term strategies, day trading strategies, which, you know, you go ahead, do what you need to do, but I wouldn't solely rely on day trading strategies. You want to have investment strategies as well. So you want to have a portfolio that's based around long-term trends, medium to long-term trends. And then if you want to have a day trading portfolio as well, go ahead and day trade. But you don't want to be focusing purely on day trading. You want to have a portfolio that grows based on taking a few stocks, cutting out the losers, holding, and then compounding the winners. That is where true wealth is made. And as I said, that all starts with really being able to find the gems, the hidden gems, the ones that aren't in our media channels. And so Metastock and the explorers and knowing what you're looking for is really where it starts. Okay, so I'm just going to switch over to switch over to my slides just to give you a summary. So this is your edge. Use the explorers to scan for the strongest stocks from the most robust sectors. That's where it starts. Use the 4-screen setup, which includes the tools and the expert advisors and the commentary to shortlist the very best stocks. And I break them down into tier A and tier B. Tier A are the ones for my portfolio. Tier B are ones that are just on my watch list. Create a risk management framework. Typically, don't risk more than 2% per position. Use the daily bottom right to place your positions in your broker account. So the daily in the bottom right, where you have your entry points, your stop losses, your levels that you want to see the asset move towards. You've got the diamonds that are being produced for entry points. All of that is there in the daily in the bottom right. Place a set of positions across, let's say, 10 stocks. Cut out the losers with a small loss. Strategically hold and compound the winners. And then use the trailing stop loss in the daily bottom right to manage your positions. Take profit and rebalance every 12 to 18 months. Repeat that process. And then here, guys, stay objective. Don't be emotionally attached. If you have to cut out, you have to cut out. If you have to hold and compound, you have to hold and compound. Don't be strategically attached to any one particular asset. That's your whole trading plan. This is what's worked for me for over a decade, and how I now have a hedge fund through the trade log and the track record that I have had verified to be able to have a hedge fund in the first place. This is it. So what you get with the Market Advantage Toolkit, you get the 16 explorers, you get the 16 expert advisors, 11 bespoke indicators, 11 templates. You also get a wonderfully detailed manual. I cannot explain how detailed this manual is that explains everything. And then you get a support structure that includes us here at Sublime Trading and Metastock as well. As I said, wonderful support structure from Metastock. In terms of subscription, it is $199 a month, but as this is a very new product, we've only been going for a few months, we do have a good deal on it, which is $99 a month lifetime monthly subscription. There is also a one-off lifetime membership, lifetime purchase, which when you get on a call with Metastock, they will tell you about your options. But if you want to trial it at $99 a month and then either stay on that subscription, you will have that for life. Or if you want the lifetime one-off purchase, you can have that as well. There you have it, guys. I'm going to go over to Bobby to see if there are any questions for the last few minutes.
Hey, thanks, Zahir. Fantastic job as always.
Thank you.
Double checking YouTube here. Yeah, so someone wants to know if this will work on cryptocurrencies.
I mean, it works on anything that has a chart. The only difference with cryptocurrencies is that it's a very, very new market. So, you know, as I said earlier, I like to look for assets that have at least 5 to 10 years of history. So it can work. You can use it for Bitcoin. You can use it for Ethereum. You can use it for, you know, more sort of established charts. But if you're going into that sort of realm of ICOs and IDOs, you know, this is for established assets.
Okay, yeah, fantastic. Thanks. I think that answers it very well. And let's see if we have any other questions in here. All right, I see a couple of good jobs and thank yous.
Great, so welcome.
As well. So yeah, I think you covered it really well. And, you know, I appreciate all the kind words you have to say about Metastock, especially the Explorer. And yes, I'd say you hit it spot on too, in regards to like support and everything regarding that. And I also want to get a shout out actually back to you, because if anyone ever has had questions about the Market Advantage Toolkit itself, something that maybe goes beyond the realms of like the Metastock software support channel, you and Kola have both always been fantastic to work with. I really enjoy, you know, going also through the emails that I get from personally being subscribed to your guys' service and getting the different rankings on the different securities and things that you guys go through on a weekly basis and everything. So I definitely, big shout out to you. And I really think people should take advantage of this offer while it's available to get for just the $99 a month, especially considering you're locking in that rate, because I definitely think this will continue to sell at that higher price point. But obviously, if you can get in early and get in at that discounted rate, I would highly recommend it. And I mean, there's no commitment or anything like that too. So if for any reason you didn't absolutely love it, guys, there's no need to continue. You're not locked into anything like that. Yeah, and on top of that, if you guys need like a trial to Metastock, the actual Metastock software, if you don't have it, but you really want to try out the Market Advantage Toolkit, then we'll get you a trial of Metastock to go along with it as well. So just reach out to our sales team, metastock.com/sales chat. They'll help answer any additional questions you have, really kind of personalize things and help you guys get started. So let me see here if I can go ahead and take back over as presenter.
Yeah, I'd just like to end by saying thank you, Bobby. Thank you to everyone at Metastock, and I hope you guys enjoy, which I'm sure you will, the rest of the G.O.A.T Summit.
Yeah, fantastic. Yeah, thanks, Zahir. I'll be in touch with you again here soon.
Cheers, Bobby. Take care. Bye.
Yeah, bye. All right, guys. So there's our first speaker for the day. Really like having Zahir on. He honestly does such a good job and really explains things really clearly too. We just touched on this, but I'll put it up again to tell you guys. I mean, we give you not just your standard support that you might be used to with some other companies where you call in and be like, hey, I need help logging in or something of that nature. We actually offer like a white glove installation and setup service. We are more than happy to not only, of course, answer any technical questions you may have, but we can quite literally do like a one-on-one personalized setup for you. We can help install the software, make sure everything's set up to kind of your personalized needs so that you're following the markets you want to follow within the platform, and you have kind of things set to your liking or to what you are used to, maybe in some of your other services or with your broker or something. We can really get things to kind of match up and be personalized to you, and that comes at no additional charge as long as you have Metastock. Also, I wanted to let you guys know we are kind of doing like a special deal today as well. We have multiple speakers kind of offering some things, and with Metastock kind of being the sponsor of the whole event, we thought we might try to put together a bundle, and included in that bundle is the Market Advantage Toolkit, as well as you can get like a trial of Metastock, kind of how I mentioned. We'll get you some additional systems as well from Trading Indicators, the Super Signals NPower Bundle 360. We'll get you a premium subscription to additional training materials and more. And I mean, you're looking at saving over 50% on this bundle, and you can learn more about that or sign up at metastock.com/summit-savings. All right, so I don't want to go too far into our next speaker's time, but I also wanted to mention this. I know Zahir touched on this as well, but we're pretty proud of this here at Metastock. We have been rated as the best analysis software in our price category for over 30 straight years in a row, according to the readers of Stocks and Commodities magazine. Metastock itself has been around even a little bit longer than that. We really did help to pioneer a lot of technical analysis software back in the day. I mean, we had our software program out before a lot of people were even very familiar with computers. So I just think that's a really fun and interesting fact there. And of course, like I've kind of mentioned throughout, if you guys want to trial a Metastock, or if you want to learn a little bit more, we are doing some special offers for that. And you can sign up for just a subscription starting as low as $59 a month. It gets even cheaper after that because you can buy the software outright if you don't want to like lease it or rent it. And then we have different sort of data options to meet your needs as well. And with that all being said, I'm going to go ahead and make some space here for our next speaker. We have Dr. Daniel Sinig, and Daniel also has been partnered with us here for a number of years. And I've had the chance to meet with him in person before, and we've spoken on the phone on many occasions. And once again, a really great guy here. He always has some fun and informative information to share about the markets. I really like his approach, especially considering kind of his background and how he kind of got into the market of financial analysis and things of that nature. I think you guys are going to be really impressed with him as well. Hey, Daniel, I just saw you come on the webcam there. How are you doing today?
What's up, Bobby? What's up, guys? Nice to be here. Greetings.
Yeah, fantastic. Oh, hey, and I got to say, we've seen your background image there. My marketing guy has commented on it before. He sees that it changes in real time, and he's really impressed by that. He likes it. He wants
It's-
us to maybe do something similar on this boring wall here.
It's called the Samsung Frame. Great TV, and you can actually program it to do a slideshow every 10
nice.
minutes or so. Yeah.
The Frame TV. Okay, nice. Yeah, I'm familiar with it. I wasn't sure if it was software, knowing you, or if it was an actual
No.
like, TV back
It's just the TV.
Okay, nice, very nice. All right, well, Daniel, I think I'm going to just pass the reins over to you. I'll be here to assist in the background in case you need anything from me. But yeah, I think I'll let you take care of it. Also, I just saw your email too while I was being introduced back on by Zahir, but I do have Nick added as well. So
Perfect. All right, thanks. Yeah, he's going to help out with some questions, should there be any. All right.
fantastic.
So,
Okay, yeah, let me pass this over.
perfect. I'm going to go ahead and share my screen. There we go. If I can, let me just see. Oh, there we go. Okay. Perfect. So that should do it. All right. Can you guys see me? Oh, see my screen.
There we go. I see your screen. Yeah, the welcome to the world of AI.
That's right. All right, guys. So this is today's presentation from my end at this Metastock G.O.A.T Summit. I'm very happy to be here, and this is the first time I'm doing this exact presentation. So we decided to change it up a little bit, and I put a couple of keywords onto this welcome screen because there are going to be a couple of concepts we're going to go through. So we're going to talk about divergence. Many of you probably have heard what divergence means. It can be a telltale sign that, hey, a pullback or an entire reversal may be imminent. So we're going to talk about this. We're going to talk about AI and what we have developed in our lab here at Trading Indicators, which is our company. You can see it here, tradingindicators.com. So we developed an AI-based system which attempts to predict the odds of your next trade before entering it. As you can imagine, this can be quite powerful if that actually works. And this presentation is going to be exactly about that. Now, imagine, if you will, for a second, what would you do? How would you trade if you knew the odds of having a successful trade before entering it? So if you knew, for example, that, hey, the chances of winning my next trade are 73%, let's say, and of course, conversely, the chance of losing it would be 27%. So I guess the answer is fairly obvious. You would only take the trades if the odds are in your favor, and if they are not, you'd stay on the sidelines. And oftentimes, in trading, staying on the sidelines and not taking a trade is the best trade advice you can get, because then you miss or you skip that losing trade, which can make and break your trading portfolio. So what we have done is we have developed something which attempts to do exactly this. We even pushed it one step further. We even made it very convenient for you to find trades which are promising right now using Metastock and some other platforms. So for example, I've used that technology to find my trade of today. And it literally took me just a couple of minutes. I think the scan took 4 minutes and then perhaps 5 more minutes of doing a bit of additional analysis. And this is my trade of today. It's a long trade of Motorola Solutions, a stock in the S&P 500 in the information technology sector. Entry around market level, around 350, with a target of 368, just at the upper end of this trend channel, and stop loss at 342 at the lower end of this trend channel, which would give you a reward risk ratio of 2.33. And as I said, it took me only a couple of minutes to find that trade. And best of all, the steps I've taken are steps that everybody can repeat as well, because they're quite mechanical. And how I did this and how I found this trade and which tools I used, I'm going to show you in this presentation. So please stay tuned. Having this said, if you have any questions or something is not clear perhaps, or you have some remarks, don't be shy. The more the merrier. Put them into the question and answer section of GoToWebinar or into the chat box, and I'm gonna pay attention to these as I go through this presentation. And perhaps Bobby And Nicholas, you guys can also have a look out for these questions. All right, so before I really get started, maybe a few words about who we are. So we are tradingindicators.com, which is an online store where we host and publish our most influential trading indicators and trading tools. So it's mostly trading indicators. And we have been in this business for more than 10 years now. And over the years, we have developed way over 700 different trading indicators, fully automated strategies, trading tools, trading dashboards, trading scanners. We cater for all major platforms, including, of course, Metastock. And of course, now also Metastock 19, the latest version of Metastock. We have clients really all over the world, in the US, a lot in Canada, which is where we are based. We're based out of Montreal. I was born in Germany, so we also have clients in Europe, in Australia, in South America, and so forth. And we do have one common objective, which is to empower you guys, the retail traders, to become better in trading and essentially make better trading decisions. As far as my background is concerned, it's actually quite a bit different of the typical speaker that you may find at these events. My background is in software engineering. So for the longest time of my career, up until I was, give or take, maybe 35, or maybe a bit less than this, my career path was targeted to become a professor in software engineering. So I jumped through all the hoops. I did my master's, my PhD, a postdoc. I was teaching at various universities in Montreal, in Germany, and some other places. But you know what? At the same time, I was also always fascinated by the world of trading. So I started trading on the side. But, as you start out in trading, I made all the mistakes and most of the mistakes that often people do when they start off in trading. I overtraded, I revenge traded, I took too much risk, I traded when market conditions were not right. And after donating quite a bit of money to the markets, I came to the hard realization, oh man, trading is not as easy as I thought, and I need help. And for me, needing help meant I need better tools which will help me make better trading decisions. So I rolled up my sleeves as a software engineer, and I started programming. Most of the tools which you now find at tradingindicators.com, they have been firstly written for our own purposes. And only once we realized, hey, these tools actually help us. They help us make better trading decisions. We thought, well, let's put them out there and share them with the public. And this is really how the story behind tradingindicators.com started. But enough about myself. Let's get into today's topic. And just a quick reminder before we do this, if you trade, keep in mind that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is capital that, should you lose it, it should not affect your lifestyle. When it comes to hypothetical performance or backtest performance or really anything based on historical data, keep in mind that this is not necessarily indicative of future performance. And of course, any trade ideas shared in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so now that the lawyers are happy, let's get into it. Well, so this is what we had in mind. And this idea came up, I'd say about 2 years ago, where we are asking ourselves the question, is it possible to calculate some kind of odds, some kind of win rates, which predict the odds of winning your next trade? Can this be done? Is this even possible? And the short answer is yes, it can be done, thanks to our what we call instant efficiency technology, and an AI-based system which will use historical trade data and other information to predict the odds of winning your next long trade or short trade. And then these odds, depending on your platform, are either displayed directly on your price chart, or in case of Metastock, they are displayed in the expert commentary. So this can be done. We can calculate these odds. But the real question is, and you may ask yourself the same question, what are these odds actually telling me? Is there any meaning in these numbers moving forward for our next trade? Because I just read you the disclaimer where I said, well, anything based on historical data is not necessarily indicative of future performance. So am I contradicting myself here? Because this is a very important question. And we have asked ourselves the very same question. And to get to the bottom of this, we conducted a very comprehensive case study, an experiment, so to say, where we back-tested very extensively a swing trading system, which we had programmed as, as a case study. We back-tested this whole thing over the course of almost 1 year, from beginning of 2023 till towards the end of 2023. It was a classic swing trading system where each trade lasted approximately 1 week. And we back-tested this on all major US stocks: Tesla, Apple, Microsoft, IBM, and so forth. And over the course of this experiment, 6,827 signals, both long and short, were generated. And then we looked at the performance of the system. And the first performance we looked at was, what if we traded each of these signals? So 6,827 signals resulting in 6,827 trades. And this was the performance. Whoa. This does not look very pretty. It's quite underwhelming. Would you agree? Nobody in his right mind would trade such a system. It's a losing system where performance goes into the negative. So not very pretty at all. But then we did something. We applied a filter to our system. And the filter would tell the system, hey, only take the signal, only trade on the signals when at the time of the signal, the odds are in our favor. And if they were not, skip the signal. And this was the new performance, the filtered performance, where we would only take what we call the sweet spot trades. As you can see, it's a difference of night and day. Suddenly, we had a winning system simply by looking at the odds, and this is important, at the time of the signal, not afterwards, because hindsight is always 20/20. So we were looking at the odds calculated as per the time of the signal. And if the odds were in our favor, we took the signal, and otherwise was staying on the sidelines. So this difference in performance gave us so much motivation that we decided to build an entire suite of indicators based on this concept, on the concept of predicting the odds of your next trade. Because this can you, the trader, empower you to make truly insightful trading decisions, to only enter into a trade when the odds are in our favor. And one such indicator, which has this technology built in, is called the Divergence Cloud Indicator. I already mentioned this one at the very beginning, my very first slide. And it's an indicator designed or based on the concept of divergence. And if you know what divergence is, or perhaps you don't, it's a discrepancy between price move and an underlying indicator. And there are many indicators based on this concept. Some are based on the RSI, where price move is contrasted with the relative strength index. Some are based on the MACD, on the stochastics, and so forth. But this indicator, Divergence Cloud, is based on our very own notion of divergence, which contrasts price move with volatility. And after many experimentations and testing and optimizing, we came to the understanding that this can be the most telling divergence indicator of all of them, which can predict with a fairly high degree of accuracy pullbacks and entire trend reversals. And by equipping this indicator with our AI-based odds prediction technology, you can even, push your odds even further by only engaging into a trade signal when the odds are actually favorable. And if not, you stay on the sidelines. Now, this may sound like a lot of theory, so let's check it out. Let's go to the chart. Let's go to Metastock and see how this indicator actually works. So moving over to Metastock, and there we go. So here we have a daily chart of the SPY, the S&P 500 Spider ETF. This is the daily chart, but before I continue, I should also mention that this indicator will work on any time frame. It doesn't matter whether you are a day trader or a swing trader or an investor. This indicator will work on every time frame. All right, so the first thing that you're going to see on this indicator, on this chart here, is that some candles, and I've already applied our Divergence Cloud indicator to it, some candles are colored greenish, you can see it here, and some of them are colored reddish. And when this happens, when these candles are colored this way, it means that we either have bullish divergence when they're green or bearish divergence when they are red. So that's the first thing this indicator does. It colors the candles. So you can see when there are areas of bullish or areas of bearish divergence. And some traders or some clients of us, they only use these candle colors for their trading. So they would use this as a filter for all the trades. They would only go long if the colors are green, or only go short when these colors are red. So it's a great filter. If you don't want to have the candle coloring, you can also look at this ribbon underneath to see whether we have bearish or bullish divergence. That's the first thing this indicator does. The second thing is it will actually give you very concrete entry signals, which are these bigger arrows here. So the greenish arrows are for long entry signals, and the reddish ones are for short entry signals. And these entries, if they are long, they can only happen during areas of bullish divergence, and these short entries can only happen during areas of bearish divergence. So you get very concrete entry suggestions. But you know what? Entering into a trade is really only one thing. Because once you're in a trade, what you need to do, well, you need to manage your trade. You need to figure out when to exit it. And there's one story I often tell to our trading community, to our members, is the following. So Joe and let's say Frank, they are meeting in their trading room on a Wednesday morning to day trade, let's say, the futures. So Frank decides to go long on the S&P 500 futures, and Tom decides to go short at the same time. And at the end of the day, both trades were profitable. This may sound like a contradiction, but it is really not. Because this is possible by finding the right time to exit your trade. I tell the story to tell you how important it is to also think about the exit, not just about the entry. And this is exactly why we have equipped this indicator also with exit suggestions, which are these small arrows in the opposite direction of your entry. So for example, for this long entry, the indicator told you, hey, let's book some profits here, some profits here, some profits there, and some profits there. And then you're flat. How many times you want to book profits? This can be configured in these settings of the indicator. And it's the same for short trades. So here we had a short entry. We booked profits here, 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 and finally at this point. All right. Sometimes it can happen that the indicator will not find, in this case, 4 times to book profits, but it will find an entry signal in the opposite direction. So let's look at this entry here. This was the COVID crisis, where the indicator quite early on gave you a short entry signal. The market followed through, it lost a lot of points, and then we had 1, 2 exits, and then we closed out and reversed the position altogether when this long entry signal came along. And this is also a sign for you to, hey, let's close out this short trade immediately and reverse it to the long side. Now, you may say, all right, so far so good. This looks like a decent indicator, but where is this AI-based technology, the odds prediction part of this indicator? Well, let me show you. So in Metastock, in order to see the odds of your next trade, what you need to do is to open up the expert commentary. So what you do is to do right click on the chart, you go to Expert Advisor, and you go to Expert Commentary, which is down here already. I guess I just minimized it. There we go. And once this is pulled up, you can see that, okay, we see 2 numbers here. One number for what we call the long efficiency and one number for the short efficiency. Basically predicting, okay, what are the odds as of today as of April 29 of winning my next long trade and winning my next short trade. And for you as a trader, this is crucial information, because sometimes, you will apply this indicator to a symbol and a time frame where the odds are not very good. They're below 50%, they're below 30%. And what will you do? Well, you would probably stay away from those trade signals, because these signals have not been working out very profitably, historically speaking. So a good indication to you to perhaps not follow those signals. But oftentimes you will find stocks, symbols, cryptos, FX symbols, where these odds are really high, which gives you some extra confidence that, hey, these signals have been honed in. They're working out well. So this will give you some extra confidence of how much you can trust these signals. But there's one more reason why these statistics are important. Let me tell you why. Just like every indicator, also our indicator, our Divergence Cloud indicator, comes with parameters, which you can use to further fine-tune the indicator to adjust it to work better on your price chart. But oftentimes, with an RSI or a MACD or stochastics, how do you know which settings of parameters are the best? Am I improving or am I making it worse? Well, now with these percentages, you can actually see directly in this expert commentary if a parameter change was beneficial or perhaps counterproductive. So let me show you what I mean. So let's keep in mind 70% and 62%. All right, so let me go into the settings of this indicator. There we go. All right, we're going to go to Divergence Cloud Settings. I'm going to click on Edit. Let's just change arbitrarily a setting in here. So let's say the divergence look back period, let's change it from 34 to perhaps 24. All right, so let's do this. I click OK. I close this, and I will refresh my chart. And let's see what happens. All right, so it's recalculating. And as soon as it's done recalculating, there we go. It's just taking a little bit of time. It will now tell you, okay, these are my new statistics. We have improved our long efficiency, but made our short efficiency worse. Now we have a win rate to the long side, statistically speaking, of 77% and 58% to our short side. All right, so it's quite a bit of a difference. Perhaps you can, if you're a long trader of the SPY, maybe we can even improve it further. So let me go back one more time to the settings and perhaps change it even further. So we change it from 34 to 24. Let's change it perhaps to 14. Click OK. Close it. Refresh my chart. There we go. Okay, let's see what happens. Again, it will take a second or two to recalculate. And let's see if my odds improved. Wow, now we're at 84% and 44%. Now it's really good to the long side and not so much to the short side. But perhaps you would only consider going long on this symbol anyways, because you're perhaps more of an investor and don't really want to go short. So this could be a great setting for you. So maybe we can even push it further. Let me go one more time to my settings here. All right, and perhaps use 7. Let's make this even smaller. All right, see what happens. Let's refresh one more time, and let's see what. Somebody's saying, can I put my webcam further down so my mouth does not get cut off? Okay, let me actually switch it off. It's probably the best. There we go. Okay, so now we are at 78% and 55%. Made a bit worse. Well, in any case, you can see how important these statistics can be to give you instant feedback of whether a parameter change was beneficial or not. But you may also think, ooh, man, this seems awfully tedious. If I had to change my parameters, step by step to find the best settings, this is just taking too long for me. But we had exactly the same thought. Trading should not be tedious, because in trading, you need to preserve your energy so that you can, focus all your mental energy on pulling the final trigger, on deciding whether to get into a trade or get out of a trade. But it shouldn't be around, changing all these parameters. because that's just, very tedious and exhausting. And we had exactly the same thought. This is why we have created a proprietary auto optimization technology, which will find automatically the best settings for you. And this technology has been integrated as well into the latest generation of our Divergence Cloud indicator. So let me show you how this works. So I'm going to go one more time to the settings here. Actually, not to the settings. I'm going to enable or load the latest version of this indicator onto this chart. And this latest version is called Divergence Cloud AO. AO stands for Auto Optimization. So I'm going to click Attach, and there we go. And now this auto-optimizing version has been loaded. And if we now scroll down to the settings here, we can see that, wow, now we have an efficiency rating of 83% to the long side and 72% to the short side. Wow, this is probably the best settings we've seen so far. This is what this auto-optimization technology does for you. Now, but perhaps you may think, I'm not really interested in the short set of things because, on the SPY, as an investor, I may only want to trade long. That's a very valid question. And we have thought about that as well. This is why you have the option to actually tell the indicator, optimize only for long signals and not for short signals, because I would never go short. For me, the short signals are not important. So this can be set in the settings as well. So we're going to go back to the settings of this indicator. We're going to say, hey, only trade long by setting the trading style to long only. I click OK, close it up, and I refresh my chart. So let's see what happens. So it's calculating, it's waiting for data. Of course, this auto optimization takes a bit of time. And now we have only long signals on the chart, along with the exits for these long signals. If you scroll down here, we now have a long efficiency of 89%. And you can see how well these signals have been working out. Just look at this chart, just ballpark it. So basically all these long entries were pretty much spot on. Of course, this goes fairly well for a symbol which has been bullish for so long. Of course, there have been some drawbacks here, but yeah, this is a way how you can find high probability entry signals on your chart. And this was achieved by using our auto optimization technology, which will automatically find the best settings for you so that our efficiency to the long side is the highest. Okay, so let's change pace a little bit. Unless there's some questions, I'm going to have a quick look if there are any questions popping in. All right. Matt wants to know, can we show the indicator on the weekly SPY? Yes, we definitely can do this, but I'm going to do this towards the end of this presentation, Matt. All right, where we are going to have some time to do a bit of a signals or symbol roundtable. So let me change context a little bit, and we're going to look at this indicator now on a completely different symbol. We're going to switch it over to Bitcoin on the 10-minute chart. And we're going to configure the indicator to both trade long and short signals. So I'm going to hop in real quick to my settings one more time and switch back the settings to trade both long and short. So this is done. And now I'm going to my Bitcoin chart on the 10-minute time frame, an intraday time frame. All right, let's see what we have. Let me just zoom out just a little bit. There we go. And we can see here now we have this indicator applied to Bitcoin. We have our long entry signals. We have our, just go back to zoom this out a little bit more. So our long signals here, and I guess it's still configured to the long only mode. So I'm going to reload it real quick to see how this indicator could be used to day trade Bitcoin. So here, a short entry, a long entry, short, long, and so forth. And if you scroll down at our efficiency ratings here, we can see that, well, okay, across all the bars, we had a 76% win rate for our long signals and then 80% win rate for our short signals on this Bitcoin chart. So you can see that this indicator works just as well on the smaller time frames, even for cryptos and any other asset class. Really, it could be a stock, an ETF, a future symbol, an FX symbol, or a crypto symbol. All right, so, but let me change it up one more time. Let's go to UPS. There we go. And we're back on the daily chart. Actually, let me just quickly go to this symbol here. There we go. So this is UPS on the daily chart. All right. So this is our divergence indicator. Let me just go back to the basics for 1 second. Divergence is a way to forecast either full trend reversals or to forecast pullbacks in a trending price move. But how do we know which is which? How do we know what to expect from our trade? Well, it's not so easy, I tell you, because first of all, the lines are blurred a little bit, and secondly, how do we know whether we are on a trending move of price or perhaps into like a consolidation move? What can we expect from these signals? That's a very important question to know. So here, for example, on UPS, on the daily chart, we can see that, hey, our signals, let's say this long entry signals, they're pretty much reversal signals. So we had a big downtrend here, reversed to the upside by quite a bit. And here, another reversal signal to the downside. Here, another one to the upside, and so forth, and so forth, and so forth, and so forth. So these are full reversal signals indicated by our divergence indicator. And if you look at these statistics down here, we can see, hey, they're pretty good. These are full reversals. And being able to predict a reversal with a 67% or 70% probability, that's quite good. Because finding these reversals are not easy. Typically, it's super hard. And more often, normally, you'll be wrong than you'll be right. Because there's a lot of power in finding these reversals, because you're going to get in to a new trend move at a very, very early price, at a very good price. Well, but the question still is, how do we know whether this is a full-blown reversal or just a pullback in a trending price move? Well, for this, we have developed a bit of a companion indicator for Divergence Cloud, which is called Trend Radar. So let me quickly put this indicator on the chart. So I'm just going to open up my template, which will apply this in the chart as well. I just saved it. There we go. I click apply. And now this indicator will be loaded in addition to our Divergence Cloud indicator. All right, so let me just minimize this a little bit here. All right, there we go. So now you see that we have Divergence Cloud on the chart, but we also have this little heat map below here. And just glance at it, you probably would agree with me that it is quite erratic. A big patch of red, a big patch of green, red, green, and so forth. It's really all over the place. There is no discernible pattern in this heat map. And oftentimes, when you see this kind of erratic pattern, it means that the market is really going from an uptrend to a downtrend, up and down, up and down. It's really erratic. And if the market is in such a pattern, Divergence Cloud is really precise to find full-blown trend reversals. You can see it here: short, long, short, long. It's pretty precise the way it does it for these kinds of markets. Let me give you a different example. Let's pick a stock which has been trending a lot, which was not so erratic. Let's say NVIDIA. NVIDIA has been probably the stock of the year. It's been super bullish for such a long time. So let's switch it over and have a look how this heat map down here changes. So I'm clicking on NVIDIA. All right, and look at this, especially at the end port here, also here in the beginning. It's much less erratic. It's mostly green, or here mostly red, but it's not all over the place. When you see a pattern like this, where you have mostly green, especially at the lower ends, it means we are in a strong uptrend with some pullbacks every once in a while, which are these little reddish areas here. And this is exactly what this indicator is designed to do. It will show you at a glance, what is my long-term trend doing, the lower areas here? What is my medium-term trend doing, the middle areas? And what are my short-term trends are doing? So here, for example, in this area, I can see it here in this little green patch, we can see that our long-term trend is bullish, it's all green. And every once in a while, we did have some pullbacks, trended up, pulled back a bit, trended up, pulled back a little bit, and so forth, pulled back, and so forth. Now, we are in an uptrend, in a long-term uptrend, but there are some pullbacks. And what is the best time to enter into a trend trade? It's not when everything is extended and we are making new highs, because typically this is when pullbacks are imminent. The best time to enter into a trend trade is at a pullback or at the end of a pullback when there are signs that the overarching trend move is going to resume. And Divergence Cloud can do this with a very high precision. Look at NVIDIA here. It's trending up. We had a pullback, price goes down. Trend radar down here is flagging red. Then it's going green again, and we have a signal of Divergence Cloud indicating to us that this short-term downtrend move has come to an end and the overarching long-term trend is going to continue. Same here. After a bit of a pullback, we have a signal and price moves up. Here again, pullback, a bit of a pullback, a long entry signal, and price moves up. So why is this important? Why is it important to distinguish between, when Divergence Cloud finds you a full trend reversal or just a healthy pullback? Well, it is important to figure out which signals you should follow. So for example, here, look at this red signal here, which is happening in a very bullish area. This would be, well, I don't know, at least for you, an indication, hey, even though we may see some downside action, it may be very limited because we are going against the overarching uptrend. Here again and here again. All right. So for you as a trader, it's important to put some context to these signals. Let's look at one more example. Iron Mountain, IRM. So I'm going to go here. Iron Mountain. Let's look at Trend Radar at the bottom. What is it going to tell us? Oops, this is the wrong one. This is also Iron Mountain, but not with the right indicator. Here we go. What are we seeing down here? Is this rather erratic, or is this rather in an uptrend? Just by looking at this Trend Radar. Well, I tell you what, it's not as clean as NVIDIA, which is not very surprising because NVIDIA was in such a bullish mode. But we can see at least starting from this point here. Here was really erratic, up and down, and we're in full reversal mode. Reversal, reversal, reversal. But starting here, we are now trending, at least to some degree, especially here towards the end of Iron Mountain. We're in a full trend mode, and Divergence Cloud once again is showing us very neat entry moments for a trend entry after a pullback. At the same time, when we get a short signal in this trending bullish market, we know, hey, this may be very short-lived. An indication for you of how much you should follow the signal and what should you expect from it at the same time. All right, so let me quickly go back to my slides. So what have we seen so far? Well, we have seen our Divergence Cloud indicator, which will give you clear entry and exit signals. Now, why exit signals? Because managing a trade, knowing when to exit is just as important as knowing when to enter. This indicator will run anywhere. It doesn't matter whether you're a day trader, a swing trader, or an investor, whether you trade futures or FX or stocks or ETFs, it will run anywhere. Also, this indicator comes with real-time statistics predicting the odds of winning your next trade, which can be a very important feature to truly make an insightful trading decision. And this indicator comes with our brand new auto optimization technology. But there's one more thing I need to show you. One last piece, which is important. And here the question is, how do we know, or how do I know which symbol currently, right now, has a signal? How do we know this? And more importantly, perhaps, how do we know which of the signals are the ones that are the most likely ones to result in a successful trade? Well, you may say, okay, easy answer, it's scanning. I need to be able to scan for signals. And I agree with you. That's definitely the easy answer. So we want to scan, but not just any scanning. We want to do what we call generation 3 scanning, which is the most advanced form of scanning. Let me explain to you why. So we have generation 1, the very first generation, the generation that most indicators provide, or most scanners provide, which is basically scanning what we call plain old signals. Yeah, so any signals, we're going to pick them up in our scanner. So far, so good. But we can push it further. Generation 2 scanning is to configure your scanner so that it will find signals which have been proven to be profitable. It's a different story, not just any signal. We want to be able to see the signals which have the highest expected profitability. That already makes a big difference. But there's one more step we can take. This is where generation 3 scanning comes in. We want to scan for signals which have proven to be profitable, and we want to use optimized settings on a per symbol basis. So basically for, let's say, Tesla, we want to use a different set of settings than for IBM, than for Apple, than for NVIDIA, and so forth. So for each symbol that we are scanning for, the scanner should first find the optimal settings, then apply these settings, and then see if that symbol currently has an entry signal. This is a very advanced form of scanning. We call this Gen 3 scanning. And luckily, with Metastock, this form of scanning is possible, which is amazing. And you know what? I love Metastock, and one of the reasons why I really like Metastock is because of the powerful scanner that Metastock provides. And what I've done this morning, actually not this morning, this afternoon, I should say, just a couple of hours before this presentation, I used the Metastock scanner to run a scan, a generation 3 scan for Divergence cloud entry signals. And in fact, just drag it over here. This is the scan I ran. It took 4 minutes to run, and I scanned through 1,522 symbols. Basically all of the S&P 500, a big chunk of the Nasdaq, the Dow, and some other ones. So quite a good size of symbols. And after the scan, I found, or the scanner found, 32 symbols, which currently have either a long entry signal or a short entry signal. All right. So when it comes to the long side, what I can do is I can simply sort my scan results down here by this long signal column. You can see it here. Whenever this column has a value of 1, it means it's a long signal. And when it's 0, it means, okay, no long signal, but there is a short signal instead. All right. Okay, but let's focus on the long side, just to keep it simple. So now I have all these different long signals. So I don't know how many of these are, 20 maybe 25. And if I had a bigger scan universe, if I was scanning through, let's say, 10,000 symbols, which is easily possible with Metastock, I may have had, I don't know, 300 different hits. 300 different symbols which currently have an entry signal. That's quite a lot. How do I know which signals are the best? Well, this is once again where our win rate prediction technology comes in. Because with Metastock, we can see the predicted win rate directly in one of these columns here. So in case of long signals, it's this column here, long IET. IET stands for instant efficiency technology, which shows you, which basically is an indication of how efficient the signal is. The higher, the better. All right, this is percentage, so I can sort by these percentages. And now this allows me basically to focus on the symbols with the highest efficiency first, which is a huge time saver, because you can focus on the ones that, hey, I only want, let's say I only want to see the symbols which currently have the highest efficiency. So let's say this one here, and then this one here. This one I skipped constellation because it has a short entry signal. So we're only going to focus on the long ones. This one we skip too. We're going to take this one, and this one, and this one, and let's say this one, and perhaps this one as well. All right, so now I've highlighted all these different results or symbols, and now on Metastock 19, I can open them all at once by clicking this little button here. Click. And now in Metastock, all these different symbols will be opened up. So this may take a little while. Let me just see where we are. So this should now be opening up somewhere. I hope I didn't. There we go. Okay. It is opening up. It's just taking a little while. And while this is opening, let me see if there are any questions. Kuma wants to know, can this be used for the 2 or 5 minute bars? Yes, absolutely. So there's no differentiation. The indicator will work on any time frame. Yeah, no problem there. Let me just quickly see if I get my chart back. Oh, there we go. Okay, perfect. So here we now have my chart. And let me just quickly see which symbols we picked up, because I had quite a few symbols already open. So let me just contrast this a little bit. I'm going to put my my little results here. The first one is EW scripts. Ticker symbol SSP0. All right, so let me open this one up. It's this one here. And let's see if I like this symbol. This one had the highest win rate. But to me, this is not enough. I know my indicator has the highest win rate, but here we can see here, okay, we do have a long entry signal. You can see it here. But would you really go for this trade? I mean, it's a long entry signal. The win rate is very high. And we can see in the past, it has been working out quite nicely. But we have also been in quite a bit of a downtrend. You can see it here, price moving down. The overarching trend is bearish. It's all red here at the lower lines. And now we have a bit of, a bullish pullback. But I do think this might be very short-lived, because we are fighting against this overarching downtrend. So to me, perhaps not the ideal candidate. This is what I do with my prime candidates. I try to put all the odds in my favor. But here I'm fighting against the downtrend. Maybe not ideal, but it's okay. Let's move on to the next symbol. What's next? Abercrombie and Fitch. Ticker symbol ANF. Let's open this one up. All right. If I can find it real quick. ANF, there we go. Putting it on the chart. Oh, this one I like already much better. Here we can see, oh, it's actually quite nice. We are in a beautiful uptrend. Look at trend radar down here. It's a beautiful uptrend. We do have some pullbacks in that uptrend, which are great opportunities to enter long, especially when paired with our Divergence Cloud long entry signals. Beautiful, beautiful. And once again, if you're in such a strong uptrend, just be aware that these short entry signals may be short-lived. You can see a bit of follow-through, but you're fighting a very strong uptrend. But now we have another entry signal. After a bit of a bigger pullback, definitely a good opportunity. But the reason why I potentially don't like this one so much, because we are fighting against this area of resistance up here. You can see this was tested twice in the past, and we may go up towards it again, and then we may bounce off one more time. So this trade may be short-lived, although it's a nice candidate after a pullback, but perhaps not ideal. But I'm looking for the ideal trade of today. So let's move on one more time. What's next? Oh, sorry. There we go. Innovia Inc. Ticker symbol Inva.O. All right, let's put this one up. Okay, one more time. Inva.O. Where do we have it? Oh boy, where is it? Can't find it. It doesn't. Oh, there we go. Inverted. There we go. All right. All right. Let's see what we have here. Ooh, erratic. I don't like it. You can see this up and down here. I really want to see a nice trend entry, but this to me is not clean. We also have this resistance area up here. Also not the ideal candidate. Let's move on one more time. I want to find the perfect one. SM Energy, our next candidate, ticker symbol SM. All right. This one here. Let's open it up. All right. See what we have here. As soon as this opens up, there we go. Yeah, not bad. Again, we have a bit of a nice uptrend here. You can see it here. It started, back in towards the end of last year. Now we just pulled back. To me, once again, I like it. We have a bit of a pullback here in an uptrend. But again, I do see a bit of resistance up here. Perhaps this would also be a short-lived trade. And finally, let's open up my favorite one, which is the next one on our hit list. It's Motorola. And let me explain to you why I like this one so much. So let me switch to Motorola, MSI, if I can find it. There we go, MSI, Motorola. I like this one. You know why? I see this long uptrend, even starting from much longer back. So if I zoom out a little bit, look at Motorola. Honestly, it's been moving up with some pullbacks or some, retracements along the way, but now it's on a tear once again. And we did see a beautiful pullback in this prolonged uptrend. You can see here, trend radar shows you this beautiful pullback. It's now has become bullish again, and we do have a long entry signal of divergence cloud. And this is paired by price being near the lower end of this trend channel, which is perfect. This is what you want to have. You want to enter at this lower end of the trend channel, not at the upper end, because this is when retracements are more likely. But now we're at the lower end. And I really like this trade because we can put our stop loss very nearby, just below the swing low here. Entry, I'd like to see an entry if we exceed these highs here, with these previous highs. So around 350 with a target at the upper end of this trend channel. I think this is a very nice setup in this long uptrend after this bit of a pullback. But now we do have signs that things are picking up again. We can see that this retracement, this red area, has come to an end. And this is paired with a long entry signal of divergence cloud. And we do have an 80% win rate across all the bars on the chart when a long signal occurred. So to me, that's pretty good. All right. And this is exactly how I identified my trade of today, which is exactly this long trade of Motorola Solutions. So long entry around 350, target at around 368, stop loss at 342. And this would give us a risk or reward risk ratio of 2.33. Now, real quick to wrap it up, then perhaps you can look at one more chart. Who is this indicator for? Well, if you're a day trader or a scalper or a swing trader or investor, this indicator is for you because it will work on all time frames and chart types. It works on everything. Also, it doesn't matter what you trade, whether you trade equities or FX or futures or cryptos or even options, you can use this indicator because it works on all asset classes and symbols. And if you are a bit like me, talking about where this indicator works. It works on basically every major platform. Of course, it works on Metastock, including the brand new Metastock 19. It works beautifully on that platform. But it would also work for MetaTrader, Ninja, TradingView, Task, TradeStation, and so forth. So for all major platforms are supported. And well, if you're a bit like me, an engineer at heart, if you believe that good tools can make your life easier and good trading tools can make your trading life easier, then this indicator is definitely for you because it will do all the heavy lifting for you. It will predict the odds of your next trade. It allows you to scan for signals, and it comes with auto optimization. And by having all these tools at your disposal, you can then just focus exactly what I've done at the very end on finding the best chart to trade. And there are charts every single day that you can pick up using this indicator. Now, as a big thank you for listening to me, and I know I talk quite a bit, we have put together a special offer for all the attendees of this Metastock G.O.A.T conference. That's a lifetime offer. Price is $497, and this one will include our Divergence Cloud indicator, which will come with our win rate odds prediction technology and auto optimization. And this is for life. You will never have to pay a single penny. But it doesn't stop there. We're going to throw in a couple of bonus offers as well. The first offer is an exclusive membership to our weekly live market sessions in our Discord channel, valued at $9.97 a year. We have this every week on Tuesday at noon Eastern. So the next session is already planned for tomorrow at noon. We will show you tips and tricks for our indicators. We're going to show you market setups. And it's also a great venue for you guys to ask questions and get all your, questions answered. So this is bonus offer number one. And bonus offer number two is the trend radar indicator, which you've already seen. A great tool to figure out what's going on in the market. What are the current market conditions? Is it rather erratic, up and down, or are we in a nice trending market? Trend radar allows you to do exactly this. So if you want to take advantage of this offer, all you need to do is to go to tradingindicators.com/GOAT. GOAT is the name of the event. So tradingindicators.com/GOAT. This will bring you to a product page where you can take advantage of exactly this offer. All right. And just to repeat real quick what's included, we're also actually going to throw in our Divergence Cloud ebook and another ebook. So you're going to get these for free as well if you sign up for this offer. Now, so you're going to get our Divergence Cloud indicator with all these entry signals and exit signals, the divergence filter, bullish and bearish divergence with auto optimization and win rates prediction. Great for detecting healthy pullbacks and trend reversals. You're going to get our member sessions. The next one is planned for tomorrow. The date is wrong. So the next one is for tomorrow at 12 p.m. and access to our Discord channel. You're also going to get our trend radar indicator, this heat map below the price chart, where you can see what's going on. What are the current market conditions? And more. And the ebooks that I promised you. So you're going to get all this should you decide to sign up for this special offer. So tradingindicators.com/GOAT. And Bobby, is there time for another chart real quick, or are we running out of time? While Bobby is getting back to me, let me quickly pull up the weekly chart of the S&P as requested.
Yeah, feel free to
do we have a bit of time?
Yeah,
okay.
Take your time. I'm up next, and yeah, I'm interested in what you have to share, so go for it.
Perfect. All right. So let me first of all put on our auto optimizing version of our indicator. So Expert Advisor, attach, and let's put on the auto optimizing version. Actually, I think it's already on. Let me just refresh it. There we go. We can see it here. It said Divergence Cloud AO. So it's reloading. This is still the daily chart. So now let's go to the weekly chart. So switching it over. Let's see what we can see on the weekly chart going back all the way to 2000 of our Divergence Cloud indicator. All right. So here we go. So we do have our the same long entry signals. You can see here working out very nicely, but not very surprising because the S&P 500 has been bullish, quite bullish over time. Now here we had our COVID crisis entry arrow, nicely picked up by Divergence Cloud, and then our reversal after COVID was over. And now we are in an uptrend ever since making new highs, overall highs. And if you look at the win rates on this weekly chart, we can see that we do have an 89% win rate for long signals and 46% win rate of our short signals. But once again, this is not very surprising on such a bullish symbol like the SPY. All right. And there's another question. Does it work for options? And the answer is yes, of course. Many of our users, they use this indicator to time your options trades, to find the buyers that you need to structure your options trade. So yeah, this is absolutely possible as well. All right, so let me see if there's some other questions coming in. Okay. Derek is asking something. No, he just says hello, Daniel. Okay, hi back. Yeah, I don't see any questions. Bobby, do you see any other questions coming in?
No additional questions. I think you did kind of a good job of covering things as you went.
Yeah, I think I talked a lot. Hopefully I didn't overpower everyone, but there's so much to say about this indicator. So I'm happy you guys stuck around, and hopefully you found it useful. And if you want to take advantage of it, it would be so nice to welcome you on board our trading community. So this is not just a package for these two indicators. It's also a ticket to join our trading community and to learn about tips and tricks and, in fact, our outlook on the markets. Perfect. All right, that's all I had to say, Bobby.
All right, well, yeah, thanks. As always, Daniel, you did a really great job. It's always nice kind of listening in. And, I work with a lot of different partners, and we've created dozens and dozens of different trading systems and things for Metastock. And you kind of really took over and did almost the creation of everything on your end. And you did such a fantastic job, too. I really think you have one of my favorite systems created for Metastock. You did such a good job, and you really took advantage of all the features and everything within it. So great work on that. I've loved all of your indicators that I've used personally, and I've always gotten good feedback from clients on your systems too. So yeah, if you guys are interested in kind of trying this out, I mean, I highly recommend it. I don't think you would be disappointed.
Yeah, and I can now see, Bobby, when you said, "Hey, my mouth is too close to the camera." I can see it was a bit misaligned. I apologize for that.
Oh, no worries. I think the marketing guy thought I should mention something, but I hadn't noticed it. He said, "Oh, it's because we commented on the TV, and so you should."
Yeah, I mean, then I moved it. That's the problem.
Yeah, but no, it wasn't bad or that distracting, really. Well, fantastic. Yeah, thanks. I see more thanks are coming in too.
Thanks, guys.
And one final tip though, because I know we had noticed you were pulling the commentary up and down, and we just added an auto hide feature to this. So if you right click it, auto hide, then when you just scroll over it, it'll pop it out, and when you scroll off of it, it'll close back down. So nice little new 19 feature. If you
Where's the auto? Where is it, Bobby? Can I see it?
Yeah, right click where it says commentary window, the orange.
Oh.
Oh, but now it's gray. So yeah, right click the title bar.
This one. Yeah, auto hide. There we go. Okay. Cool.
And then when you scroll back up to the chart, it'll go away. And then you can scroll back down to the bottom and it'll pop it up. Or you can put it like on the left-hand side of the chart too. But now you go over the commentary window box at the bottom.
Oh, there. I got it. Cool. That's awesome.
Yeah. Fun little tip. My presentation next is just going to be covering a lot of those little tips. So I was like, oh, we'll share one now.
Perfect. Thanks, Bobby. All right, guys. Well, thank you so much for listening.
Thank you, Daniel.
Bye, guys.
All right. So I'm going to make myself the presenter here. All right, guys. Yeah, Daniel did a great job. It's always entertaining to listen to. The hour goes by so fast, I feel, when he's presenting. Same with Zahir. Hopefully I can do a good job as well here, and you guys are interested by some of the things I get to show you today. I'm really excited about what I get to show you. I'm going to be kind of doing a somewhat standard presentation that I've done in the past, just kind of showcasing, how you can find a different trading strategy that might work best for you, how you can search for buy and sell signals today, things of that nature. But I get to do it in our new Metastock 19, and I think you guys are really going to be interested by that. Before I dive too far into that, I wanted to let you guys know we're doing a special bundle deal. You can check out what Daniel just had to offer at the tradingindicators.com/GOAT, where we've put together a slightly different bundle on our end, where we actually took several of the different trading systems that Daniel has created with his super signals and his power bundle 360 systems that include all the indicators he just showed to you now, as well as the market advantage toolkit, a 3-month premium training subscription on Learn Metastock, as well as some additional free materials. The total value that you guys would be looking at in this GOAT Summit Traders Pack that we've put together is over $3,500, but we're offering it this week for just $11.95. And you can get that offer and learn more about it by chatting in at metastock.com/sales chat. We're happy to answer your questions about that, or go to the metastock.com/summit-savings, and you guys can take advantage of that. All right, moving on to my presentation here. That's me about, 7.5 years ago when I very first started here at Metastock Software. And I'm actually, I would even say, one of the newer employees here at Metastock. The average employee for Metastock has been here for over a decade, well over a decade now. In fact, and it kind of just shows you the type of community that we have here at Metastock. And, I have the privilege of getting to work with so many other people in the trading industry, especially in my specific role where I work with all of our international partners. So people like Daniel and Zahir and the other speakers that we have today coming on after me, as well as dozens and dozens of others. And I am by no means a professional trader myself. However, I have been interested in investing and trading for a very long time now, and I've been trading for a very long time with success. And I contribute that success to all the people that I get to learn from. And so what I'm hoping to do today is maybe just share a little bit of the knowledge that's rubbed off on me from all these different partners and people I've gotten to work with over the years, and hopefully teach you guys some really useful ways to help you improve your trading. That's the main goal today. I know I had to read through this kind of at the start of today, but just in case you're joining in now, I'm going to quickly go over our disclaimer. This demonstration, it's just designed to instruct you on using Metastock and the accompanying software plugins. I'm not giving you guys any recommendations to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. And Metastock shall have no liability for any investment decisions based on the use of the software or any trading strategies or information provided in connection with the company. All right, and now that that's out of the way, let's do a little bit more background on Metastock. You see here we have the Metastock version 1.0 on a floppy disk. Excuse me here. And that's because, we were actually founded back in 1982. So we've been around for over 40 years since the initial inception of the company. We were purchased by Reuters back in 1995. However, we did end up divesting from them later on. And we did release our first real-time data feed based on the Reuters technology for Metastock in 2005. And then we released Metastock's Zenith platform in 2012. So that one's been out for over a decade now too. As mentioned, we divested from Thomson Reuters back in 2013. However, it's still the same core employees here. As I mentioned, most employees here have been with Metastock or the company for well over a decade. And I'm one of the newer ones coming in at about just 7.5, almost 8 years. And even though we divested from Reuters, we're still partnered with them. We still get our data from them. They've gone through several name changes since I've been here. I mean, Refinitiv, and now they're owned by the London Stock Exchange Group, LSEG. However, it's still the same reputable company that people have known for decades, or basically based off of that, the Reuters here. And we still get all of our data from them for both our end-of-day services and our real-time services. Today's last speaker, or second to last, so the one actually after me, he's going to be going over the Metastock Zenith. You guys will definitely want to stick around for that after my presentation. But that's just kind of some of the background on Metastock here. And so even though we divested from them, we're still the same core people, and it just kind of allowed us to actually make moves more quickly. We don't have as much red tape now when we want to put out an upgrade or something of that nature. There's not as many levels of, management that might have to review something before we're able to release it. Yet we still have all the benefits of being partnered with the major company like Reuters or LSEG now to get all of the trusted data that you guys are used to. We've mentioned this a couple of times now, and Stocks and Commodities Magazine is actually one of our sponsors for today's event, but they have, the readers at least of Stocks and Commodities Magazine have rated us as the best analysis software for over 30 years in a row for the Metastock Daily Charts DC category, and for over 10 years in a row now for the Metastock Real Time, which was just released just over a decade ago. So that goes to say a lot, that I think adds a lot of kind of credibility to Metastock here, that we've been rated as the best analysis platform in our category for as long as we have been. So again, for today's presentation, what we're going to be going through with you guys is how can you find securities to trade? I mean, that's a fantastic question, and I'm going to show you guys some ways of doing that. And, when should you get into and out of a trade? We're going to be reviewing that. I'll show you what systems might work best for you and your kind of situation, even though I know all of you might have very different situations, and today's presentation is keeping in mind that people are joining us from all over the world. Also, I'll help you to learn a little bit more about how you might be able to learn about a specific company before investing with them too. And I get to show you a lot of this stuff inside of the new Metastock 19 software. And that's actually where we're going to be spending most of our time. So let me go ahead and tab over into there. So you've seen this already today. Daniel was showing the Metastock 19 software with his different indicators from trading indicators. And yeah, so I know you guys are already kind of familiar with the chart in here and what it might look like, especially having already seen some of our other speakers today. But I'm still going to just go through a real quick workflow. And maybe for those of you that are just joining now, I know in some places of the world you might just be waking up and you couldn't attend the entire event today, though there is a recording, so you guys can catch that later on if you want to go back and watch anyone else. But what I want to show you guys here is just a quick chart. So this is a chart of Ford, as you can see, with this nice watermark that's an option to have turned on with Metastock 19, which I like to have it on just because it makes it so much easier for you as a viewer to kind of know what I'm looking at. You might not know to look up here and see the F and know Ford. This makes it far more obvious here. But I'll say, with as great as Metastock 19 is, so far what we're looking at seems real basic. Okay, and I understand that. I get that. Well, let me show you why Metastock is the preferred charting platform, preferred technical analysis platform, with just a few tools that we have available that you might not see elsewhere. All right, so first off, if I just double click on the chart here, we've got options for your pricing style. So maybe you're a bars, interested in bar charts, maybe not, maybe you like candlesticks. We have all those different options. That's nothing too fancy. I mean, we even have Heikinashi, we have range bars, 3-line breaks, etc. We have all of that. You can also kind of personalize your color options here, save them as a default, or we can restore defaults. This is kind of a view I personally like to look at. Let's go here, actually. I like candlesticks. I like them green when they're going up, red when they're going down. Again, this is nothing too game changing or anything like that, but we're going to work our way into that. So you have all sorts of options here for your charts. And of course, too, actually, another thing I should point out, like Daniel, he was in a light version of Metastock. I'm in a dark version here. You can see I have Metastock dark theme. He was in a light theme. If you like the darker borders around, things of that nature, or whatever maybe you have your computer set as for Windows, if you have kind of a dark theme for that, Metastock's just going to naturally go into that for you, or light theme and vice versa. So there's a lot of customization options. That's kind of what I'm getting at with that. But we take things a step further too. So I'm just going to apply a real basic indicator to my chart here, one that a lot of you are probably familiar with. So we have the MACD, or the moving average convergence divergence. And I'm going to go ahead and take this MACD and just drop it on my chart here. It's going to give me some options in case I want to change it. And so with the MACD, it's taking some moving averages and it adds a signal line to it. I'm not going to go too deep into the specifics of it, as this is a more common indicator, and I'm really just trying to show you some of the power in Metastock. But one of the most common ways to use the MACD is when that 9-period signal line here, this dashed blue line, crosses over the MACD. That's going to signal like a buy. And when it crosses down below, that's going to signal a sell signal with the MACD. That's one of the most common ways of looking at it. And what I'm going to do here too is just come and take this vertical line and kind of show where that's happening. So you have one happening like right there. And let's grab another, just to kind of give you this example, and one kind of happening like right here. So you can see when there's that crossover and that crossover there, that would generally say like, okay, well, here is maybe like a buy, there's maybe a sell, etc. And that's how you might look at it. There's also other ways of utilizing it to know whether you're in like an overbought or an oversold condition, depending on how far it is away from this zero line here. There's also ways of using it for convergence and divergence. So a lot of different ways to utilize the MACD, the moving average, or the MACD here. And again, I know this isn't too groundbreaking yet or anything like that, but where Metastock really starts to shine is a feature that we've seen earlier today as well. And it's one of my favorite features of Metastock, and that's when you turn on like an expert advisor and you apply expert commentary to your charts. So maybe you know what the MACD is, maybe you don't, and maybe that applies to several of the indicators in Metastock. I mean, we have hundreds of indicators that are built in. You can also easily create your own. I actually don't think I wanted to remove those lines. I had them up there for a reason. Let's go ahead and put those back on. And so with this, in any case, what I can do is, instead of just applying an indicator to my chart, if I attach this expert advisor here, it's going to give me a lot more information and a lot more kind of guidance on a system in Metastock versus just having an indicator attached. So what I'm going to do is hit attach here. And we're going to notice a handful of things. And I actually dropped that on the wrong spot. I just realized. Let's go to the actual crossover there. Okay, and so now what you see here, a few things have happened, as I mentioned. So first off, I'm going to point out this bullish and bearish ribbon that was applied to my chart. So very easily, at a glance, I can know now when, according to the MACD, we're in a bullish market condition or a bearish market condition. And the way that it's kind of judging that too is depending on if the signal line is above or below the MACD line. And instead of having to like look for these crossovers, and as you had seen, even when I placed this line on my chart, I actually dropped it at the wrong spot because it's so close together right here. I couldn't quite tell where exactly it was crossing, and I had attached it the day before when it hadn't actually crossed over. So that's actually a perfect example too of why this expert advisor is better than just using the indicator itself, because the expert advisor is actually giving me the signals right up here on my price chart. So I have a buy signal showing up right here, as you can see, and a sell signal that showed up right here. So when, when the MACD goes through the signal line, we're getting the sell, and above we have the buy here. And two, in case You get things mixed up occasionally. Who does that? I don't know. I definitely didn't just mix anything up. We can also apply this expert commentary too. And so I was actually just demonstrating this to Daniel Sinig. So you can put the expert commentary really wherever you want. Currently, it's down here. Where I prefer to keep my expert commentary window is over here on the left-hand side. And I can select, you might see if you look real close, there's a larger window here, which is just going to hold my commentary here on the left-hand side, even if I'm over here doing stuff. Or if I would have dragged it just one little section over to that smaller bar, it would do the same thing as me clicking auto hide right here. It would put the commentary window, as you can see right here on the left-hand side, and then I can scroll over it when I want to view it. So that's a new feature inside of Metastock 19 that I really love. I mean, the expert commentary, our commentary window specifically has been around for a while. But I did want to show you guys that new feature because I do really like it and I like how it plays out, especially when you also add our data window and put that over there as well. But here we go. Here's the commentary window I was talking about. And now this is going to spell everything out really clearly. A lot of the expert commentary also comes with like the color coding that makes things just more quick and more easily absorbable as well. And so now if I had come to this day, I've just clicked here and it moved it here to January 31st, 2024. And this is going to explain basically everything about the MACD to me. So this says the MACD can provide buy and sell indicators in 3 ways. You can have the signal line crossover, the overbought, oversold conditions. You can have divergences. But currently, the MACD is bullish because it just started trading above its signal line. It crossed above it 0 periods ago because I'm on the actual day that it happened. Let me actually delete this line here just to make that a little bit more clear about what I'm talking about here. It'll also give me information such as, how much the price has changed since that signal occurred. It's letting me know that it's currently not in an overbought or oversold condition here. And there have been no divergence signals within the last 5 periods as well. If I move kind of the date around, you can see I'm going to get different answers. This is going to change. Like if I go to, the sell signal here, it's letting me know that it's bearish, as I can also see down here. That's right, the day that it happened. You get the closing price, you get the change value, you get the MACD value, the signal line value, all of that in the expert commentary. And again, I'm just really using a real basic indicator here for you guys, but this also applies to far more complex systems as well. So I just like to use the MACD because it's a lot of people are familiar with it. And it's kind of easy to follow along, but it's such a good example of where a simple indicator can actually be far more useful if you're using it on the right platform and with these types of tools that we have made available. There's a number of different ways that you can access these expert advisors. I had just right-clicked earlier to attach it. You can also come up to here to this cool little guy or gal with the top hat on, and you can see we have hundreds of just kind of built-in experts. You can, of course, create your own. I mean, I know maybe you're like, oh, I don't want to have to scroll through all of those. Well, you can also just simply kind of just type in what it is that you're looking for. So I type in MACD. Now we're seeing the MACD by Metastock, but we have some other trading systems that have their own versions or variants of the MACD or using it in certain ways. So those showed up too, not just things that start with MACD, but also that have MACD in their name throughout. And this applies to, several different trading systems. As I had mentioned as well, you can also create kind of your own advisors and attach your own rules and things to them. We've actually made our formula building, we've improved on it with the release of 19.2. The Metastock formula language is very similar to like the Excel formula language. If you're familiar with kind of creating formulas or things inside of Excel, it's similar in Metastock, and we have a lot of free material kind of showing you how to do it. I mean, if you just come inside of here, you can click new right here, and then you can start creating that on your own. And we've added in like additional lines, like if you maybe make a mistake inside of the formula builder now, the software will tell you which line that mistake was on and put the cursor right there. It makes it real easy to kind of find where something might have gone wrong if you're not expecting if you weren't expecting a certain result or something, that's been improved on in the software. So absolutely great there. We also have, I mean, these expert advisors go with a lot of our systems. One of the systems that I kind of first used inside of Metastock, did one of my very first demonstrations on too a number of years ago, was the ETS trading system. This was an add-on back then that cost a few $100s, but now it's actually included for free inside of Metastock 19. So the value of that add-on alone is worth more than the upgrade. Oh, I am seeing some questions come in here. But so we have tons of different systems in here. I'm going to get to that question in just a moment here, but super easy to apply. Even if you have a really complex strategy or something of that nature, you can use this expert advisor. You can use this commentary to really give you a lot of additional guidance in your trade, kind of help guide you through the whole thing. Like here with this ETS that's included, as I mentioned, for free inside of Metastock, you'll see the commentary here. With this trading strategy, not only are you going to get like an exact entry buy signal and sell signal on your chart, it also provides you with a protective stop, an initial profit target. You get an extended profit target with that as well. This system also has, you know, the bullish and bearish ribbon on here too, and it comes with a great manual that also includes a lot of important details on risk management. And that's one of the reasons that I did one of my first presentations on the ETS or expert trading system, is because it had such good money and risk management tips and information that came along with it as well. And I found that really useful. And I found that I was already doing a lot of that in my own trading, but it kind of solidified that they were the correct moves. And it's just performed historically extremely well. I'm going to show you guys some examples of that a little bit later. So stay tuned for that. Getting to these questions here. Someone asked, what happens if you change the parameters of the MACD, like to 5 and 34, for example? So fantastic question. So you kind of noticed, we have the MACD down here. Here's just the indicator itself. I can come in here to the properties, and yeah, I can change like the signal line on the time periods here. I can also alter like the color and things of that nature too. And I can save these things as like new defaults as well. And not only can you do that on the indicator, and of course this would change the indicator, but not the expert advisor in that scenario. But you can also come into the expert advisor, and let me actually go back to the MACD here, and we'll attach that again. And now I'll come into the expert advisor, go into its properties here. So in the properties, in the commentary, you can kind of see all the coding that's going into this and all the information that you're getting. And you can also come in and edit it. So you can edit the indicator itself, but you could also go in and edit the expert advisor. You'd want it to match the indicator so that it's utilizing the same periods. And then that's going to, yes, it's going to change where the signals occur on your chart, just like it would with the indicator as well. So yes, and then you can just go in and hit update, and it'll update that on your chart. So you are able to change the values in that. You're able to change the values of a lot of the systems. There are some proprietary systems, expert advisors or things of that nature inside of Metastock, but I would say the majority of them though are kind of unlocked, and you can go in and you can edit them to do what you want. And if you ever have questions about, you know, how they work or what's going to change, you know, if I alter this, etc., we have a fantastic support team that can help you with that. But a lot of it's kind of straightforward inside of here as well. So you are able to change the values, and you are able to update a lot of the expert advisors or the indicators as well. You'll find everything kind of in Metastock can be very customizable. Or sometimes when you have an add-on like Trading Indicators has their Power Bundle 360 and some of the indicators Daniel was showing you. He built in indicators that have editable values. So you can go in and edit them inside of this indicator editor that we have. And then it'll apply all of that to your chart for you. And you don't have to actually go through and change all the code or anything like that. You can just update the values to be what you want them to be. So fantastic question. Let me see if I have any questions in this other platform known as YouTube here. Okay. It looks like we're good so far. All right, so I'm going to keep going. All right, so what I've kind of shown to you guys is, some of the Metastock charts. Very few of kind of the features here, but you can see, how using an expert advisor instead of just like a standard indicator can really give you a lot of additional guidance on your trade, make you more comfortable, give you that extra assurance that you're reading the indicator properly and not mixing something up, etc. Well, now you might be asking, all right, well, if I can do that, yeah, how long am I supposed to spend each day going through charts, determining which ones have a buy and sell signal today? Or another question, a really great question would be, how do I know which of the securities that are giving a buy or sell signal would be, the best for me to trade, etc. And let's go ahead and answer those questions for you by using some of the other tools inside of Metastock that I think you guys are going to be really impressed by. And the first one we're going to use is going to be the Explorer. So we see here, the Ford, it had a buy signal like 3 days ago. But what if I'm looking for something that has a buy or sell signal today and I want to be able to compare those, etc.? I'm going to go ahead and open up the Power Console here. Right now we're inside of our charts. And I'm going to go down to the Explorer. You can see I actually already have the MACD typed in here, and I have it selected there because that's what I want to use. If I hover over it here, it's going to tell me the MACD shows buy and sell signals, the MACD crossing above or below its 9-period exponential moving average. So that's what we're going to scan for. And if I come down here, this is going to list all of my instruments. One thing that you'll notice, if I come to the very top here, is we have access to over 330,000 instruments with Metastock. This is Metastock real time, what I'm doing the demonstration on today, but I'm going to be doing everything on a daily time frame. So everything I'm doing now can also be done on our daily charts version of Metastock. And something else that I've mentioned earlier today is, we can kind of help set the software up to meet your standards too. If you don't want to have a list this long, even though it's really easy to kind of manage and go through, we have these arrows. This is kind of more so what you would be looking at. And if you wanted to go into the public online data list, you wanted to jump into equities North America, that's what's open here. And just select something out of here, that's really easy to do. But you can also hide some of this stuff. If you only look at, say, the US markets or the Australian market or the Canadian market, whatever market it may be, you can hide the additional stuff and just keep what you want on here. And then same thing like with the explorations. Sure, we have hundreds of explorations built into Metastock, and it's really easy to just type in what you might be looking for to pull that up. But you can also save some as your favorites. And so you just have a favorite tab here with a few options. Don't let yourself be overwhelmed by anything that you're seeing today, because there are ways to kind of simplify the software to be just what you want it to be. And we have a fantastic support team here that's willing to help you kind of do that too. So just something I like to mention and point out. But for this demonstration, we're going to be using that online data list. And I went into index constituents, and we're just going to search the S&P 500. Some people kind of build their own universe of securities or trading instruments based on like an exploration, like I'm going to show you guys. Like you could search for only securities trading between $5 and $10 with an average of over, 2 million in volume per day, etc. You can do stuff like that to give yourself a smaller list and then work off that list. We're just going to work on the S&P 500 because it's nice and simple. The records to load here, I have that set to 1,250. That's about 5 years of data because you have about 250 trading days in a year. So we're going to keep that there. We're going to be on this daily time frame, and we're going to have our filter applied. You can see all of that is there. And I'm just going to real quickly hit start exploration here. It's going to take just a moment to boot up, especially when we're broadcasting here. It takes just a second to get started. But once it gets started, you can see this is blazing through. And one thing to point out here, percent rejected. So you can see so far over 87, 88% of these are being rejected. And that's actually a good thing, because what that means is for each one that's being rejected here, that's one less chart basically that I'm going to have to look at to do analysis to find something that has a buy signal or a sell signal, etc. today. And you can filter this list down even further. You can even take this list of results here and then run additional scans off of it. And you don't have to do that one scan after the other. You can set multiple up to run together based on any sort of sequence that you want. But what we'll see here is if I sort by just clicking on the by section here, and you'll notice that this arrow is kind of letting me know, hey, we're sorting by this column, either by ascending or descending. So all the ones with a 1 here are giving me a buy signal, is kind of how it was explained when I first hovered over the MACD trading system in the Explorer, if you guys remember that. We can see 438 securities were rejected. That means these do not have a buy or sell signal. If I come here and I search by the sell signal, let me scroll back up to the top. So you'll see there were a few that have a sell signal, but the majority of securities here are showing a buy signal today. And now one thing that's great is I can simply, well, first, just so you guys can remember with me here, we're going to look at advanced micro devices here, AMD, and then we're going to look then at HP is the next one listed, then AES, and then the Insulet Corp, which is POD, P-O-D-D. I'm looking right over here to see the symbol. But if so I have this list of 65 results. If I just double click on this first one here, it's going to open up the chart for that. And so here's the chart. I actually have my templates currently set to just be a clean blank template like this. However, if you're going through this specific workflow, what I would recommend doing is you can come into the Power Console and we can come to our chart and we can set our default kind of template here to be the MACD. And we have like the MACD histogram here. And yes, so we'll go ahead and do that. And now if I come, let's actually close this down so I can do my example more flawlessly here. And let's go ahead and open up that AMD. If I close this down and I make this open, okay, so this is opening up the AMD advanced micro devices here with the MACD. This is actually the template. So earlier I had applied our expert advisor. This template is very similar, but it's an actual full template. So it has some other settings that are kind of attached to it. Like this one has a dark mode kind of theme on it and things of that nature. But you can see it still has the buy and sell signals from MACD on it. And it comes with the commentary here as well. And you'll see right there on the very last day, there's a buy signal. And very last day is in today, there's a buy signal for AMD according to the MACD. So now, instead of having to, once again, go through 500 charts to try and find what has a buy signal today, I can just run that scan. You saw it took a few seconds, really, even with us broadcasting here, to be able to get me that full list of results. And now that I have those results listed here, I just opened up that first instrument and I can just click on next instrument here and it's going to open up the next one. So now it's HP Inc., as you can see, or with the watermark back there. And it's opening up with my MACD template here applied because I set that as my default template in the Power Console. It's real easy to kind of just go through these charts and kind of look at them. You know, maybe I'm pretty familiar now with the MACD and I don't really need the commentary on. Let's go ahead and auto hide that. I have this here and I can just click through and go through all the charts in that list. If I don't like one, you know, I can maybe look at this and be like, I don't really like that. It had a sell signal not that long ago. It just came out of bear. I don't know. I'm just kind of making things up on the fly for examples here. But you can close that down if you don't want it. You don't have to save it, etc. And move on to your next ones. Or if you find a few that you really like, maybe you want to save those into a list. And you can save that into a list, or better yet, even like a layout of securities you might want to save to look at later on. And then now in Metastock 19, it's really easy to jump in and out of different layouts or things of that nature. I could have just demonstrated that, but just to show you an example, had I opened up a few of them and saved them onto like a chart, and then I wanted to go back and open them up, we can see, you know, someone recently had the indices layout open right before I had done my demo. So I'm going to open that one up as well. And you can see this one has multiple indices opening up here. But if you saved your list of like MACD explorations as a layout, it would be really easy to jump back into them here. Or I can go back into that main chart where I'd first opened up Ford at the start of the presentation, and I can go back onto my charts I was working on here. Or again, jump into that indices layout You might like some of the different views that we have for these now. They are, I did initially have those inside of a tabbed view, but you can open them out into a larger view as well. So lots of different, just like fun things that you can easily do here in the 19, and then we have the commentary window over there. Love it. I'm getting a little bit distracted by these new 19 features though, and not doing my normal workflow. So sorry if I'm bouncing around on you guys too much. Let me keep going though with some of these examples. So let's hover back down here so I can pull back up that list of explorations that we were going through earlier. So that's one way you can find a list of securities that are going to have buy or sell signals today to save you a ton of time. Instead of looking at 500 charts, okay, this gave a list of 65, and maybe I only want to consider the buys and not the sells. So I could filter this list down even further to save me even more time. But I'll say, you know, with this system, and apparently, you know, it's been a good trading day so far. I haven't had time to really look at the market, but if you're getting that many buy signals, I would say things have been going up. But maybe you want to filter this down even further. And so a great question to ask would be, well, how do I know of those 65 results, which one has performed the best historically, or which one I should trade? Maybe you only want to trade one security a day, or, you know, up to 3 or 5, whatever it may be. But I would hope you're not trading 65 different things a day. That just seems like a lot to manage, in my opinion. But we have a tool to help you out with that too. We have a tool to help you find the best out of all of these, in fact. And so what I'm going to do is come back into this Power Console here, and I'm going to go down to the system tester inside of Metastock. And what this does is it tests different systems in Metastock against a list of securities to see which ones have performed the best historically. And then it has a ton of information about that too. You can put in your own specific account size, some of your own risk parameters and things of that nature, and it'll tell you, okay, with your level of risk, your account size, if you would have used the, for example, MACD trading system on this is how it would have performed. What I've actually done here, so I've gone into the system tester. Up here we have the system test. So just before the presentation, I was kind of going through this, and I had already selected the MACD expert system. If I hover over it here, it tells you kind of about that and how it works. So I could just select this one system test, the MACD expert, and then come down to instruments, and I could either select, I could select anything I wanted. I could test this across that entire S&P 500, or an option that I often find myself using. If you come down to like the bottom here of these tabs, you can use the last exploration results. So everything that popped up in that last exploration, I don't know why I only have 56 of them selected, or maybe those were just the long trades actually, but I'll grab all of them. So all 65 from that list of explorations, and I want to test the MACD against that list to see how it would have performed historically. And I realized I made one very minor mistake earlier when I was pre-running this test, because I actually set it up. You see it has 11 selected here. I wanted to show you the results also using the expert trading system that's built into that came with Metastock 19. So you can see some of these other strategies, and you'll see here when I'm using the ETS as well, some of these are utilizing different like exits. Like this one will utilize stops and targets to get you out of a trade. One of these will, every time there's a buy, it gets you in, and every time it switches to a sell, that's when it gets you out, etc. There's different ways of kind of using this, and you can, of course, learn about all of that inside of the manual, or just kind of hover over these to see what they do. But I wanted to show you guys a comparison. So not just the MACD on that list, but also these. And I'm still going to show you guys the one that I ran. This takes a little bit longer because not only, even though, excuse me, there's only 65 here. As soon as I add in an additional trading system, now that's another 65 times that trading system. And I'm doing a lot of systems, and just for time's sake, because I only have about 10 minutes or so left here, I didn't want to run that. But that's what I didn't want to run that in real time. But I'm going to show you guys the results. The only difference here is earlier I was using 5 years of data, And for some reason, I hadn't checked this, but when I ran the test, I only used 504 records. So roughly the last 2 years, but that's still going to work for our purposes here. And so I could just hit, start exploration on this. Oops, sorry, exploration. I did not mean exploration. Let me close that down. I could just hit start system test here. One thing I want to show you guys, I was just mentioning this. You can go into this system test and kind of set it up to utilize your own specific parameters. So if I go into like trade execution here, we just have this set on realistic market prices. So I can say buy at the buy price or sell at the sell price for the system, etc. What realistic market prices does is basically if I get a buy signal today and it's a daily bar, well, then when I go to actually buy the security, I'm going to be getting in at tomorrow's opening. But maybe you wait until the last 10, 15 minutes of the day, so you're really buying closer to the close price, etc. You can go in and set that up. But I'm just going to have this clicked on realistic market prices account. I have this set up for a $10,000 trading account that's willing to trade up to 50% of that at a time. If that's all the money that you had, I wouldn't recommend trading 50% of your entire account at a time, but maybe just for this testing account, that's a much smaller portion, you would do something like this, just for example purposes. So we have all of that selected. I can hit start system test. That would take just a few minutes, but I don't want to spend a few minutes really doing that. So instead, I'm going to just show you guys the report. So I just right clicked and hit open up report. So you can see there, this scan was ran today, the 29th, just a little bit earlier. And I'm going to go ahead and click view here. And I'd actually done this earlier and I was kind of surprised, but I guess maybe it makes a little bit more sense if it's just on the last 2 years of data. But every single trading system that I selected there, if you're using them on these 67 indicators that are showing a MACD buy signal or sell signal today, they were profitable. So that's actually pretty impressive there. But also, again, all of these are from the S&P 500 too. So I think that's worth mentioning again as well. But now that I have this list of results here, I can sort it by like average net profit, and I can see which of these was the most profitable with these specific settings on this time frame. And also I have this trading system set to be both long and short trades. I should have mentioned that earlier, but just over the last 2 years. So if I look at this and I sort it by the highest net profit, it's, I also included the Ichimoku, not just the ETS, but the Ichimoku system, which is also included for free in version 19. It used to cost $500, I believe, for that add-on, maybe $600. I might be misremembering that there specifically, but I included all of them just to kind of so we can just so that we can compare it to like the MACD. And you'll see the ETS trading system was actually the best performing out of all of these strategies on those 65 odd securities. If I had just ran the scan on the MACD, because I had that, if I knew I wanted to trade the MACD, well, this is what the MACD would have looked like. So I'm looking inside of that now, and maybe I trade this one by like net profit. And so, okay, if I took the MACD trading system across those 65 securities showing a buy or sell signal today, traded it for like the last 2 years roughly is what this scan did. Well, here is what that would have looked like. And it looks like the most profitable was actually Ford. Funny, I always just open up Ford because it's just an F where my index finger normally rests. So it's an easy chart to open right up. But it looks like that's one of the best performing for the MACD, at least in the last 2 years. But I can see here, I can see how many of my trades were profitable, how many of them were not profitable. So on Ford, 46 winners, 36 losers. But obviously, well, I would think most of the winners were higher than the losers in that case, but that number's pretty close. Well, instead of just guessing, let's go ahead and click into it and learn a little bit more about this system test. So this tells me, okay, so the profit on my $10,000 account was 91% over like these last 2 years, basically. Buy and hold profit. So had I just bought Ford and held on to it instead of trading it, there would have been a 45% return. So it was better to trade it with the MACD than to just buy and hold it here. Based on that, you can see how many trades there were here, the trade efficiency, how many of the trades were long, how many of the trades were short. The average profit was about $300. The highest profit, $16.43. Well, let's look at the unprofitable trades. So the average loss was only 126. So that's something I like to see. I want my winners to be bigger than my losers generally, or at least my losers to be small, etc. So this allows me to further do analysis on the MACD here and see how it would have performed historically with the trade options that I set up. So if I close that, oh, actually, I didn't want to close the whole thing. I just wanted to go back. So finishing off kind of there in the MACD, that allows me to know like, hey, okay, instead of, now looking at 65 charts or whatever it was with the MACD, maybe I just select the top 10 that have performed well with the MACD. And now I just go and look at these charts. I save these into a list and look at them to learn more about them. So that's going to let me know, hey, the MACD has performed the best on these securities that are giving a buy signal today. So maybe this will help you kind of further reduce your pool that you have to analyze. Or, there's other ways to use that system tester too, as I've kind of shown. Maybe you kind of know what market you want to trade or et cetera, or, maybe you did some sort of analysis to get you down to a smaller group of securities like the 65 that I have in this list. And then you wanted to see how all of these different trading systems performed on that. Well, again, so the ETS performed the best on that list of securities on the time frames that I had set up. And I can come in here and look at it this way and dive deeper into this specific ETS trading system results. Some of these trading systems are using different like entries and exits. That's why there were like 5 or 6 of them listed there. And I just went into the top one here. And now I can see, okay, this is how the expert trading system performed. I can sort this by net profit. I can again kind of go in and do a further analysis to see how that's performed historically. So that's the system tester is going to allow you to see which trading systems work the best on which specific securities, at least on the terms that you want to look at. So, also it depends, like if you're doing intraday analysis or end of day analysis, or whether, you want to only consider, market data for the last few years, or if you're really looking at a more long-term investments, et cetera, and you want to have a much larger data pool. That's the beauty of Metastock, is it's really customizable for you guys to kind of go in and change it around to work right for you. But the software does allow you to easily identify trades and it does all the hard work for you, and it'll give you ways of seeing which systems perform the best on certain securities. Because even though the MACD is pretty popular and it works on a lot of systems, as we saw from that list result, there were a lot of securities that you would have lost money had you traded the MACD on them over the last 2 years, trading the buys and the sells, etc. So you want to make sure that whatever strategy you are using, I would think you would want to make sure that it's worked historically on the security that you're looking to trade it on, and Metastock's going to help you to do that, and it's going to look beautiful doing it too. Man, I really just love this new Metastock 19 and kind of how you can go through and jump through things so easily. I love the interface updates that they've made here. And Greg, thank you for correcting me. So the Ichimoku Master, it used to cost $3.99 and ETS was $2.99. But those are both now included for free in 19. And I see I just have a few minutes left. I kind of think I've shown most of what I wanted to inside of Metastock, but let's jump back into my PowerPoint to make sure I didn't miss anything. And to answer a couple more questions. So you might be asking, well, how much does it cost? You can get Metastock and everything that I've shown to now included basically for as low as $59 a month. I was using our real-time version of the software, which would have allowed me to do intraday analysis, but I kept everything on a daily time frame. So with the $59 a month option, that could work for you. If you're in the US or looking to use America's data for North or South America, it starts at $69 a month because it also has some options data in there for you. Or if you want Metastock real time to do the intraday analysis and to also have access to Zenith, which is our real-time data feed that also has news and fundamentals, which I had actually mentioned I'm just going to show that too. Maybe I just have that load in the background to show you guys something super quick. That starts at $265 a month. You can get a buy 1 month, get 2 months for free on this to get like a 3-month extended trial. And then if you wanted to buy the software outright afterwards, you can buy it outright to further reduce your monthly rate or do like an annual plan for even more savings. There's a lot of different options to get the right package that suits you. I recommend jumping into our chat room, metastock.com/sales chat, and speaking with one of our account specialists, and they can kind of help you determine what might be best for you and what's going to give you the best rate for what it is that you're looking for. In any case, with your Metastock subscription, you are going to get free white glove setup and installation service. We'll give you free unlimited support. We'll make sure we answer all of your questions and that you're comfortable in the with using the software. And again, yeah, we can do like a one-on-one demonstration where we go through and do like a full demo of the software with you at no extra cost. I mean, you're looking at paying potentially hundreds of dollars an hour to get a similar service with some other platforms, and we just offer that for free to all of our clients. So that, I think, is another fantastic thing about Metastock that you're not going to find elsewhere. So with that extended trial offer, you get the Metastock 19, you get the data for the region of your choice, you get that white glove installation and support. We're also going to include our Unleash the Power of Metastock 19, which is like an extended ebook instead of tutorial videos that goes along with the chapters in the ebook. And it'll very clearly kind of show you how all these power tools work. And I didn't even touch on all the power tools. I only showed you guys charts and the Explorer and the System Tester. We also have option scope inside of there. We have also our forecaster that can kind of forecast the markets and give you like a heat map and things of that nature. And like a quote center and the Zenith or Icon platform too, which actually I don't think I have enough time to show you guys that. So maybe next time, or find it other videos on Metastock Zenith if you're interested in news or fundamentals on our YouTube channel, which is just youtube.com/Metastock. Another offer you guys can get if you want to have Metastock, but you also want to have the trading systems that some of our earlier speakers were demonstrating. So you can get the Market Advantage Toolkit, Super Signals and Power Bundle 360, as well as premium training and everything else that you've seen throughout the entire event today. Normally valued at over $3,500. You can get that for just $1,195, and there's no commitment on this stuff too. So if you're not happy with it, you can cancel it. Any of our one-time purchase systems, so if you got the Super Signals or Power Bundle 360, etc., which is the bulk of that cost, that's fully refundable within 30 days too. Only subscriptions are non-refundable. And you can get that by scanning this QR code here. And some people have said QR codes, if someone's at their computer, they're never going to scan those. But I often like to I have a 4K TV that I use as one of my monitors. And, I think a QR code would be real useful to just grab my phone and take a picture of it instead of having to type in a long URL or something. So I like those on there. That's just me. You can also chat in with our sales team too if you guys have questions. With all of that said, I don't want to take up too much time. From our next presenter, we should have Bradley with us. Let me go ahead and open up my GoToWebinar window here. Hey, Brad, are you with me? I see that you are in the room. It looks like you're...
Bobby, how are you, mate?
Oh, there you are. Hey, I'm doing well. Good morning to you.
Yeah,
I know
how you doing? All right?
Nice and early on your end. I'm doing well here. Yeah, my day is kind of ending here. I know yours is just starting, but that's kind of the beauty of today's session. We get people from all over. Excited to have you on today.
No, awesome to be here, and I'm looking forward to giving everyone a bit of a run through of the power of Metastock, power of the market, try and isolate the best trading opportunities, all those bits and pieces. So probably less of a sales pitch, but more of a real focus on finding those trades and letting the market guide you to the trade, as the heading suggests.
Hey, perfect. And I'm sure a lot of people are going to appreciate that. I know I'm very interested to see what you have to say. I always like kind of watching your analysis on the markets. I like following along with you. So I'm going to go ahead and pass it over to you and kind of get out of your hair, get out of everybody's hair, so that you can do your thing here. So
All right.
you just received a pop-up to share your screen.
Yep. I think I've got that nailed. Is that, where are we?
All right. Yeah. So I see your image in the Traders for Traders. Welcome.
Yeah. All right. Yep. Okay. That's good. We're on the right page. I just want to give there's a couple of pages here just to sort of guide you through what I'm going to be talking about. Okay. Now, my name is Brad Gilbert. I've been trading for 35 years, which seems like, well, most of my life anyway. But I started investment banks and, for almost 20 years. And then I set up Trades for Traders about 15 years ago. And we've been sort of helping traders navigate the markets, trade, get the skills and knowledge to become consistently successful traders. Now, let's just go into what I want to focus on, right? As a trader in the institutional banks, you're on the front line of the market, right? So you don't have the luxury of waiting for an indicator that's, they've got a 3 or 4 hour time lag to sort of tell you, hey, you should be buying or you should be selling. The market data and what's happening in the market will guide you to the trading opportunity, right? So let me just run through that sort of component. Okay, so the $1 million question, where will prices go, right? If we had the answers to that, well then, you know what? None of us would be online and we'd all be sitting at home or on the beach sipping pina coladas. Now, if you know where the prices are going to go, right, or you've got a very good idea, it's going to give you a lot of answers, right? What you should trade, what strategy you should use, when to get in and when to get out. Then you overlay that with good capital management. And that's when you've got a winning trading formula. Okay, this is about market knowledge, understanding what's going on. And this is where Metastock really comes into play. Now, out of those sort of 4 major components, there's one that's really important, okay? And it's when to get in and when to get out, right? Anyone can pick the direction of the instruments, right? And a lot of analysts you see on either the TV, CNBC, or whatever it might be, they generally say, yeah, it's going up, get long, but it's like, okay, being a trader, it's more of a finesse than that, right? We've got limits, we've got, drawdown limits, you've got capital to manage and a whole range of things. So where to get in and out is super important. Now, it usually revolves around sort of 3 major components. The release of macro fundamental data, right? That's where you'll see significant shifts in momentum and potentially direction of the financial markets. Specific technical levels, okay? Now, every trading opportunity starts with the technical setup. It really has to. If you're just trading the release of the macro fundamentals on their own, that can be problematic if you don't really know where the trends are, liquidity issues around those releases. So technical analysis is very important. And I'm going to show you how to basically not spend so much time in front of the screens, but look for those specific levels. You can set up trade alerts on Metastock, and that will save you spending endless hours in front of the screens. And one thing I use out of all the sort of various indicators out there is stochastics, right? We used to use this in the banks, it used to be relative strength back in the day, but then as technology sort of improved through the late 90s, I guess, we wanted to gauge momentum in the market. Now, this is super important when there isn't any macro fundamentals and can really guide you into when to get in and when to get out. Now, that was one thing that we know about. So over the years, even going back towards, 15 years ago, I didn't want to spend endless hours in front of the screen. So I developed a range of trade execution tools to take care of business. Okay, what I'm talking about is to manage execution of the macro fundamentals, the technical setups, and then sort of putting stochastics over the top of that. Now, before I get started, and you won't sort of hear this from too many traders or analysts, trade station setup. This is where I think most traders get it wrong, right? You've got to spend some time getting a trade station set up. and spend a few bucks getting the right setup so you can see the market. Now, the ideal trade station setup, it's 3 screens. Now, we have traders in our network who have 5 or 6. Now, that's great. And I would enjoy having 5 or 6. I've only got 3. This is the setup I have. It allows you to see all components of the market at once, right? So you're not getting frustrated seeing the price action or the technical levels breaching or the release of news. You can see your trading platform and you are relaxed. It's a different frame of mind and something that you need to consider if you want to trade long term. Okay. Now, this isn't going to cost you an arm and a leg, right? I've got 3 27-inch screens. They range from 100 to 130 bucks. Now, I'm not a gamer. I don't need, fancy visuals. Desktop computer, okay, your tower is probably going to cost somewhere between 200 or 500 bucks. You want to spend a bit of money on getting some RAM, but this is the ideal setup. Now, if you've only got 1 screen, and most people I know use a laptop, and there's a whole range of people that just trade off their phones, that is really not adequate, okay? You might get used to it, but you're not going to be able to see what's going on in one picture at the same time when you need to see it. Now, 2 screens, okay, it's only just adequate, right? You can see the charts, your price action, your trading platform. You can sort of spread things around. It might just do the job, but really you need to come back and focus on getting set up properly, minimum 3 screens, okay? And this is super important, okay? Spend the extra cash now before you start trading. Now, when you're trading, you might have, a couple of $100 or $1,000 or even a couple of $1,000 on the line. Now, by spending, say, $500-600 on a setup, it's going to add value to your whole trading system. So invest in yourself, invest in your prospects, and get set up correctly. All right, so enough of me sort of just gas bagging there. Let me just get into the market here and show you what I'm really talking about, okay? Now, I've just got my main Metastock screen up here, right? And what I'm talking about is, okay, where will prices go, right? This is the main component that you need to understand to get, to reduce your overall sort of risk and improve your probability of success. Now, I have 3 screens, as I just mentioned. The screen we're looking at the moment is my middle screen, right? It's like a global markets data, okay? It tells me everything that's going on across the equities. I've got the major currency pairs, commodities, US treasuries, and then I've got a range of currencies that I would frequently trade on the right-hand side. Now, this is all sort of well and good, but let's go back to the starting point. Where will prices go? And it really starts with let me just come back to the screen here, to the technical side of things, right? And this is the power of Metastock, and I'm not sort of here to sort of beat the drum of Metastock. I've been using this product for close to 20 years, since I was in the banks and then straight out of it. Now, I've got a range of templates set up here to cover pretty much every aspect. Let me just get my pen up. There we go. Okay, let me just change the color. Okay. Now, so looking at the different templates here, I've got a whole range of different things that we can be using. So it allows me to sort of basically track the market and sort of follow things as I'm going along. Okay. Now I'm just a bit, haven't been using Go-To Webinar for a while, but let me just sort of work this out. Okay. So, sorry, let's go to take that off. There we go. Okay. So looking at the markets now, when you're looking at where things are going, there's a starting point. And what you need to be starting with, and I've just got the majors up here as an example, and I'll go through all my charts and I'll go through the templates and I'll show you a whole range of things. But the key part to it is understanding as a starting point, what's going up and what's going down. Okay, that's the first port of call you need to find out. So if I come to my daily charts, and I'm just, as I said, I'm focusing on the major currency pairs here at the moment. Now, the general idea of why we want to find out where the long-term trend is And it comes down to the old adage, the trend is your friend, right? So if you're looking at the markets and you're not sort of really respecting the trend, well, you're probably making it a little bit harder than you need to. Sometimes you might guess right and you might be sort of getting long dollars without even knowing that the long-term trend for the dollar is up, okay? But if you're getting short on opportunities when the trend, the overall long-term trend is up, well, you're going to make it hard for yourself. You're going to run into brick walls and things are not going to work out for you long-term, okay? So it's very easy to look on your charts here and work out exactly if these instruments are going up or down, okay? Now, let me just sort of come back and I'll just give you a bit of an overview, a quick run through of some of the features of the charts. Now, for those traders who aren't aware, right, the brokerage firms turn on their pricing, usually 2 or 3 hours after the market opens. So the charts that you see on MetaQuotes and a lot of the platforms are incorrect or inadequate. The pricing you see here on MetaQuotes comes from EBS and Reuters. So it is the same pricing that you see with the bankers. Now, when I come back to drawing my charts, I'll try and go back as far as I can to find out all the relevant data for where support and resistance is. Okay, and when I find it, it's just a matter of drawing the trend lines and then identifying the levels. And I've already got a couple drawn, but I've got some of the longer term ones here drawn back here. And there are a lot of features here to make this easier. Okay, zoom in, zoom out, snap the best fit, and then you can come back and sort of really assess, okay, and this is what I'm talking about. Where will prices go? Well, if you're looking at the dollar, and I'm looking at the dollar index here, right, which is against a basket of instruments, and the euro is 58% of this. So if the dollar's going up here, euro's going down, right? It's pretty easy to work out. But what I'm trying to do on this chart here, you can look for trading levels off your daily charts. Okay, stochastically, it's a little bit oversold. It is breaking higher. We do have some previous highs here, but as far as the way institutional bankers draw their trend lines, this is what they would have. Okay, so all I'm looking for at this point is what is the direction? At the moment, to me, the direction is up, right? And you don't need to know much about the macro fundamental picture at this point, because the charts sort of tell you this is the macro fundamentals factored into the market. Okay, so you've got your charts here, you're looking around and going, okay, this is great. Okay, dollar's going up. And as I said, when you look through the various instruments, okay, you can basically tell if the dollar's going up, euro's going down. At the moment, we have had a bit of a short move to the downside or a move to the downside on sterling. And this is where you might start to adjust some of the levels, right? Because it's sort of recovered, you want to sort of work out, is sterling going down or not? Now, you want to try and remain as objective as possible, right? When you start thinking yourself, right, that's when things can get a little bit awry. And you just want your general principles for drawing technical analysis to be succinct, so you don't sort of confuse yourself and start drawing the wrong trend lines, thinking this one's going up or going down. Now, sterling has rallied 260 points off that low. That's pretty much why I would redraw that trend line. So what does that tell me about sterling? Okay, where are prices going to go? Well, it's a little bit more uncertain at the moment because it's in the middle of the range. Same with the Aussie dollar, and the Kiwi sort of coming back into the range, as is dollar Canada. Okay, whereas euro, well, it's almost worthy of drawing a new trend line, but at the moment it's still sort of breaking down. It goes with that dollar move to the top side. So this tells me, the long-term trends tell me exactly where this instrument could potentially go. And this is where we switch back to the hourly charts, and this is where the price or the trade execution occurs for all the institutional bankers I work with. As I said, I worked in institutional banks for 20 years. For about 10 of those, I was the chief dealer, right? Managing 50 or 60 traders and a lot of egomaniacs, a lot of lunatics, but a lot of good people there as well, and a lot of good traders. So when it comes time to trading, okay, for example, this is where technically it becomes very easy. Now, I will be thinking here, the long-term trend for the dollar index is up, okay? Now, these trend lines are on hourly charts. Now, I've got a support trend line on the downside and a resistance trend line on the top side. Ideally, if there's no major shift in the macro fundamentals, and I'm going to come and cover those shortly, but you would either be looking to buy a dip, okay, or look to buy a break of the trend line on the top side. That's the path of least resistance, and that's technically how easy it can be to work out where the best trading opportunity is. Now, I know a lot of traders are in a hurry to make money, but you'll find that the more professional you get, the more patient you will be, and you will wait for the right trade to come into play. So right now, for me, okay, the trend is up in the dollar. Are we at a turning point fundamentally? Not yet. Okay, we do have the Federal Reserve this week. Maybe they'll give us some answers, but the data has been suggesting they are on hold, which suggests a longer dollar in the longer term. Okay, so that's what you could be looking for. Now, when it comes to trading technicals, right, there's a couple of things you can do here. Now, if you didn't know what was going on in the market and how the global data comes in, and we're going to sort of add more flavor to this to really isolate when you get in and when you get out, okay? But just generally, just at the starting point here, what we're looking for are good technical setups with a trend, okay? So you've got your daily charts, you've got the trends here. You can isolate instruments that are trending very nicely. Okay, dollar yen, probably the odd one out. It's a little bit crazy at the moment. The euro, I still like the euro down, but you know what? It's not about what I like. It's about what it's doing, right? So I would sort of be putting it right at the moment, Aussie, Kiwi, Sterling, say dollar CAD. They're not really sort of clear-cut trend change of trends at the moment. So I'll take those out of the picture, okay? And then you come back to your hourly charts, and then you can focus on those instruments you actually have highlighted, okay? As I said, dollar index and dollar Swiss, probably the two instruments that are trending particularly well, and even the dollar Swiss more so, right? Looking to get into a trade on the downside to go with the trend of the top side, or waiting for a key macro fundamental to really kick it in the guts and send it downwards. Okay, so that's what we're looking for when it comes to trying to work out where price is going to go. The charts will give you the answer, right? These, you got to respect these. These are your roadmaps to where everything has been and where they're going, right? That's the way the bankers look at it. Okay, this is your roadmap and your guide to where the prices are going. So what should I trade? Well, as I just mentioned, you line up ideally the daily technical levels or the long-term trends with the execution levels and the short-term direction. You get long-term and short-term direction working together, even just technically, you're more likely to be successful than going against those trends. Okay, as I said, unless there's a key macro shift from the central banks or the economic data. So that's the sort of first port of call. Now, there's a couple of different things that you can do here, and we can sort of isolate, okay, whether, say we're looking at euro and there's a euro opportunity, and you can see here on the hourly charts, it looks different to the longer term picture. If anything, it looks like it's stalled, it's trading a bit mid-range. You can see it is going down, but right now it's not doing too much. But we can start to isolate potentially, not just trading the majors, right? Because I am looking at the major currency pairs here, depending on which instruments you might like as far as trends go, then you can isolate the trading opportunity a little bit better. And what I'm talking about is, if I just come back to, okay, this main page, right? And this is where we can sort of start to look at, okay, what is really impacting what and where are the best opportunities? Now, for instance, I'm sort of looking at euro, saying euro's going down, right? And the dollar is going up. So if I had a key macro release here on the euro, let's see if I can make that pen a little bit thicker. No, I don't know what I'm doing there. Okay, so what we can start to do is, this is where you're looking at the instruments, right? So if I was looking to trade, say, a euro release that was coming out, or trade technically euro, I can actually come into these templates and have a look. I'll be focusing on the instruments that are already going down. If they're going down, once again, this is about knowing where prices are going and what instrument you should trade. And then you can work out, okay, so if euro's going down and these ones are already going down, well, it's the path of least resistance. They will continue to go down quicker. If you're starting to trade or looking to trade euro on the downside, and you're starting to trade, say, euro Swiss, well, it's going up. It's going to go down slower than the other pairs are going up. All right. So there's a number of different things we can do to isolate the opportunities. Now, this is why I wanted to mention that is when we are looking at the charts, okay, and once again, just coming back to this, the key component here is I don't want to, like I sort of worked in banks for, as I said, for 20 years, and I've been trading for 35. I don't want to spend endless hours in front of the screens. So just on a technical perspective, okay, I don't want to sit here and wait for it to go either up through this level. I can actually set a break trade to execute to the top side on, say, the dollar index or other instruments without worrying about what's going on. One of the dangers here of trading technically is if you're looking to, say, just go with the range, okay, down at this spot, and the dollar index starts drifting lower, right? If you're not watching that, well, what can happen is, depending on momentum in the market, and you'll be able to gauge that from the global markets page, you may sort of get a bit of a false break trade. You may get kicked in here, go long, you get stopped out, and then it goes higher. So ideally, trading the technical side of things, you want to sort of be aware of when it gets down to these levels, right? And this, as I said, if you don't understand how to get this data to you, and I'm sort of talking about setting trade alerts, you could be sitting there for 6-8 hours a day waiting for this thing to dribble lower just so you don't get in at the wrong level, okay? So what I can do is, and this is sort of one of the luxuries of using Metastock, is allowing myself, okay, opportunities to set these trade alerts, okay? So for instance, if I just come in to, say, the dollar index, I set the alert here, I can come over and actually set up the dollar index. We can either set it up as a yield, or I can go, okay, so I want it to go above that previous level, and I'll just put a level in here that's close to where it is, so we can hopefully get it to execute. And you can actually set these alerts to send you emails, pop-up notifications, messages, all these sorts of things. So I've got my email there. I've got a sound. I can throw in a pop-up. Now, the alert frequency, I can actually get this to tell me loads of times, which would be quite annoying. Only once and then pause the alert, which is usually what I want. I don't want to receive 5 or 6 different emails about the same sort of alert. So what I can do is have that set up, and I just set the alert. Now, the aim is, right, and I've already had a couple of alerts in there. The aim is to basically take control of your day and your trading. You need to make trading decisions when the dollar index gets close to these trend lines. Okay, now, as I said, you can set a break to the top side, because if it's usually breaking to the top side, it's because of an event. It's going with the trend. So I don't need to usually watch that, but you can set alerts there as well. Now, why am I talking about these levels? Now, if you're not sure about this, 90% of volume occurs around the trend lines. This is where trading decisions are made. It's where instruments may change from an uptrend to a downtrend. And that's where all the bankers and the corporates, right? All the fund managers are transacting here, trying to predict the next move. Is it going to go up? Is it going to go down? I don't want to get caught long if it's going down, all these different components. This is where the volume is. Trading mid-range here, yeah, there's volume going through, but it's nothing like the levels that you will see around these trend lines. Okay, so just understanding that is important. So when do you need to look at the market? When it gets to these levels, ideally. Now, as I said, if it's with the trend, I will happily already place a pending order in the market to capture the move. But if it's a range trade, okay, and this is where it can get a little bit sticky, trying to pick the bottom here for it to go back up, you may want to sort of set an alert there. It'll allow you to go and play golf, take the dog for a walk without worrying about you missing anything. Okay, so that's one of the key things that you really want to sort of take advantage of. And there's no shortage of, you can set alerts up here for a range of different instruments, right? So for instance, I was looking at Euro, and I know Euro is tied to the hip with the dollar, right? So I can actually put in here, ask, okay, if it's less than, say, I've got a level down at 107 the figure, I can set that up. Now, once again, I'll come down and just set the alert. Now, you can actually update the settings to be sort of permanent, and then you can sort of set up your details there and just hit set alert, right? So once again, you're actually not only getting detailed information about what's going on in the market, you're getting control of your trading day, okay? Now, easily you can toggle these things on and off. You can edit the alerts. You can do a whole range of things. The good thing is when you are setting alerts, you can actually set them up for various economic indicators. Now, ideally, I would like it to sort of alert me if there was a surprise release outside the range of the forecast. That would be good. But the team at Metastock haven't really sort of got that far yet. But they do have a range of things, and you can subscribe to various summaries, the daily summary or the weekly summary. Okay, get those sort of up your sleeve, and that's where you can come back and actually sort of really, basically sort of work out where you should get in. Okay. Now, when it comes down to the third item on my list here, we're sort of talking about what strategy should you use. Okay. Now, when it comes down to the strategies, okay, I'll come back to my main sort of charts here at the moment. Well, so let's have a look here, say the dollar index, okay? And I'm looking at the dollar index. I'm looking at the dollar index on an hourly time frame. What I can do is when I sort of start to get involved and I see an opportunity on a specific instrument, and it may be like the global markets, it could be oil, right? It could be gold. It could be any of these instruments. If I start to get a sniff of a good trading opportunity and a good setup, I have templates for those specific instruments, okay? So what I'll do is I'll go into my dollar template, my dollar index template, and up here, and I've got all these saved. And what I'll do is I'll have a look here at the hourly, daily, weekly, and monthly. Okay, now the weekly and monthly charts may be a bit of overkill, but you know what? It's filling up a bit of space. And you know what? I've got that many screens here. It's easy to look around what's going on. So when it comes time to making decisions around, is this thing going to go up or down? Technically, you can make a very good assumption or analysis. I was going to say assumption there, but analysis of what is actually really going on. Okay. And that's going to make the decision more objective, right? The less you think in your trading process, the better your outcome, right? And as I said, I've been doing this for a long time. When you start thinking, that's when things go wrong. So just looking at this, all I'm trying to find out and identify where is it going and where's the next move, okay? And with that, it just comes directly into that, what strategy to use, right? If this was, okay, let me just come back to the hourly chart to use it as an example. If we were looking at the chart here, right, and you're like, well, what strategy should I use? The strategy you use is really relevant to the trade execution platform, okay? Or unless you're talking to someone, right? Because on the top here, if it's breaking higher, it's a simple break trade, right? That's what it is. And the trade on the downside here, it could either be called a range trade or a trend trade, okay? Going with the trend. Now, people often ask me, what's the difference between those two? Well, generally speaking, if I was placing a range trade here, I would have a stock standard entry, okay, and stop loss, and my take profit would be up here somewhere, okay? depending on what's happening. Now, that's your stock standard. If it was a trend trade, I would give myself bigger parameters, right? I might have like a much bigger stop loss because I'm looking for an overall bigger move. Okay, so they are one of the same things, but two different plans that you need to be aware of. But it just becomes easier to understand what strategy you're going to put into play. And that strategy is basically what you need to know, because you need to tell the trading platform, okay, I want to buy, it's a buy limit, okay, which is below the market, or a buy stop, which is above the market. And that's the sort of strategy. Now, when it comes, and they are trading strategies, when it comes to specific trading strategies, okay, what strategy am I going to use? That's where I'll come back and start to dig deeper into this sort of data page, okay? And what I'm talking about is if I want to follow the market and I've got a range of different things to isolate the opportunity even easier for me, right? This page here really allows me to see what's going on with say, like the risk on, risk off profile. Now, for those that aren't aware, we cover this in the course, the risk on, risk off name came about during the global financial crisis around 08, 09 from the media. It's just their way to tell us that equities are either going up, that's risk on. If equities are going down, it's risk off. But with that comes a few different things. Generally speaking, okay, and this is one of the sort of key strategies that the bankers do use, if we have a risk off situation, right, then equities, US equities will be going down. You would have the Aussie, Kiwi, sterling, Aussie, Kiwi going down and the dollar going up. Now, there's been a bit of disruption with the overall sort of potential intervention there from the Bank of Japan. Hasn't been confirmed, but it sure as hell smells like it. So there's a bit of disruption in the markets. And one thing about understanding the strategies, what to trade, what strategy to use, it really comes down to understanding, okay, the market dynamics. Okay, if these things are going up, well then Euro, Sterling, Aussie, Kiwi should be really going up and the dollar going down for a risk on sentiment. And to isolate that even easier, okay, I've got the risk on, risk off pairs. At the moment, Aussie and Kiwi are going down and the CAT is slightly up. Now, the changes here, like the change in the time frame here, a lot of these instruments are just being reset, okay? For those that aren't aware, at 5 p.m. New York, all the it's the start of a new day. 5 p.m. and 1 second is the start of the next day, and a lot of the instruments, the percentage change gets reset. So that's what's happening here. So to make it easier to work out what I should be trading, okay, set up your platform, your Metastock, follow the path, okay? Look at the equities, look at the currencies. Is that flowing into the risk on, risk off pairs? What are the safe havens doing? Is the oil trade in play? Okay. And then you can start to look through commodities, see what the impact of the US treasuries is. And then you can start to sort of pick off a lot of these instruments, right? For example, trying to buy dollar yen, like on a day like today, where the yen is going through the roof or has been. Okay. That's not a trade. If anything, you're looking to go with that. So this is the way you can actually start to come along and look for opportunities in the market around what you should trade, what strategy to use. Now, let me just come through and show you another aspect where once you've got an idea, and as I said, if I start to get a bit of a sniff for a trading instrument, I'll go deeper into the charts, I'll go deeper into the crosses, okay? If I'm looking at Euro, I'll check out all the Euro crosses. And then in particular, not only checking out the Euro crosses, I'll see which ones are going up and which ones are going down on a daily percentage and a month to date, ideally. So I know what the longer term trend is. I can see it visually. I can see what the intraday range is. And that gives me a starting point to start to build the trading opportunity. Now, if I come over here to the different page here, we'll come to the economic numbers. But if I'm looking at the major instruments, I like to see what they're doing, which ones are performing exceptionally well and which ones aren't. Now, if I come into the Euro template, you'll notice I duplicate everything, but I change all the details and the data specifically to that instrument, okay? So This is my Euro template. I've got the Euro charts. Funnily enough, I've got German data and the Eurozone data to look at. And I've got the relative strength. I've got the German bonds. I've got the Euro crosses. I've got everything in here. Everything's Euro related, because when you are focusing in on the opportunity, okay, what you should trade, what strategy to use, when to get in and out, this is all relevant information that I need to probably assess. And the more assessing you do, and that's what this tool's about, the better your chances are of isolating the best trading opportunity. So I can actually come in here and I've got all the Euro crosses set up so I can see the relative strength over the same sort of time frame, what's outperforming and what's not. Okay, Euro Yen, okay, 0.91%. You come down to Euro Aussie, it's down 0.89%. So they're the two extremities. Now, is one or the other going to be a better trading opportunity? Well, if say, for instance, we saw Euro start to jack to the top side, we might see a bigger move on Euro Aussie because it's already been really stretched. But at the same time, you could use that same opinion. If Euro Aussie is already really weak and we get weak data, you know what? It could be the one to focus on. But it will allow you to start investigating, why is this so strong? Why is that so weak? And if you can isolate that, well, then your probability of success on that opportunity is getting even better. Okay, so this is, once again, really using the data that's in front of you, letting the market guide you to the trading opportunity. Now, so just coming back to the main page here, and don't forget, we've got our alerts. They haven't kicked off yet. Well, I've got Euro set at 107, the figure. Let me just update that, right? So let's get this thing into play. So if I put that at, say, 17, update alert, we should hopefully get an alert there. The dollar index, let me just have a look what level I've got there on the chart. It's at 105.63. Change that to 64. Like, these alerts are, as I said, you will get an email with the updates, and the alerts have been updated. So you don't need to really sort of check into that. So coming back to the economic numbers, okay, and this is very important for understanding what's going on in the market. Now, you can follow the data. So when to get in, when to get out. Technically, I've sort of shown you that. It's around the key technical levels. When it comes to looking at the fundamentals and what these things do, okay, this is where the fresh numbers come into play, right? Everything that's come out prior has been factored into the market, and that's why the instruments move. Now, when it comes down to sort of looking at the key numbers, there are economic calendars you can look at. Now, if you focus in on Metastock, there's the central bank and political events. You just need to be aware of when these people are speaking or when potential releases are coming out. Okay, holidays is a good idea to sort of keep track of who's on holidays, because that will determine whether we have a busy day or a quiet day. Okay, so you can see there in China, we've got a pretty quiet week. There's holidays across the board. So you know what? That may sort of quieten down the Asian session. And Wednesday, Labor Day in Germany and the Eurozone and Switzerland. Once again, Europe could be quite reasonably quiet at that time. Anyway, so coming back to the economic events. So these events are potential opportunities where we may see a shift in momentum. Okay, and you've got a whole range of data. You can set this to be, you know, last 7 days to the next 7 days is what I usually cover. Last 7 days to the next 30. There's a whole range of different settings you can choose. And what we're looking for is the data to come out specific in relation to the expectations, and that can cause a shift up or down in the instrument. And this is quite important to when to get in and potentially when to get out. If you're carrying positions, say on the yen coming up to big releases, well, it might be a signal to get out of the trade, pause, stop, have a look what the impact is, and then you can potentially get in or walk away depending on what the opportunity was or what the outcome was. Okay, so, and just scrolling down, there's some economic numbers which are more important than others, and that's where you need to sort of keep track of those. And we're talking generally the ones here with 3 bars are the high or important numbers that you sort of, which and not necessarily that you need to watch or trade, but you need to sort of be abreast of, because these numbers are a smaller variance in these numbers could lead to a potential move. If you have economic numbers, say with 1 bar, you need a very significant variance in the number to get it moving. The 3 bars, well, that tells you we don't need much to happen here to get this sort of swinging around, right? And that's something that you need to be aware of. And not only being aware of to manage positions, but to instigate positions or manage your overall risk, right? The trading opportunities here around the US non-farm payrolls, okay, it's going to be a little bit loose. And a lot of people sort of misinterpret the non-farm payrolls as potential trading opportunities. It is a bit of a mess, a bit of a quagmire. It's great to know what's happening on the dollar, and trading it 1 or 2 minutes afterwards would be beneficial. You do give up a bit of the move, but you do miss the liquidity issues around those releases. Obviously, understanding what the Fed funds target rate is and what the expectation is for this outcome is absolute paramount. And what you can do is, as I said, with the central bank and political events, you can come down here and you're thinking, well, is Jerome Powell speaking today? Well, you can see that they have got the statement and there's a press conference afterwards. That is important to understand and know, because if you are thinking of trading, you might want to be sort of paying attention at that specific time, because you know what? He says something a little bit off kilter, you can see a significant move in the currencies. Right, so that's where we are as far as sort of trying to work out what's going on. Now, the general features here, now let me just come back to, I'll just run through the templates here because I want to give you a bit of an overlay of how my whole ecosystem works, right? And the traders that actually sign up to our training programs get access to these elaborate templates, okay? As I said, if you're a trader and you haven't used these tools before, they will open your eyes to opportunities. You can actually visually see them. So if I just come back to the main page here, now this is my FX template, and I've got basically all the currencies here. Now, what I do is I invert, if I need to, the currencies. So this is the US dollar relative strength. Okay, if the dollar's going down, it will be in red. If the dollar's going up, it'll be in green. Okay, so some of these instruments, like sterling, is naturally quoted as sterling against the dollar, but you can invert it, okay, or reverse it, so you can actually just see what the dollar's doing, right? And that's going to be good on a good day. If you see the dollar lighting up here, all green or all red, it'll tell you the direction, right? And that could be something to look for. Then you can go and find instruments as to where to get in, right? Depending on the range of the day, and also start to sort of think, well, hang on a second, I need to find out what's going on here. Now, my global markets page, I have the charts there on the left-hand screen. So the screen you're on at the moment. But this is where you can you need to keep track of what's going on in the market. Okay, now if I just bring you over here to my third screen, my right-hand screen is my general news screen. Okay, so there's a couple of things here that I like to keep track of. Now, if I just get that pen off, up the top here, I've just got it set to major news. And down the bottom here, all news. You can have these set up for anything specific. Say you were looking for something from Elon Musk, you just have Elon Musk typed in there, or Tesla. Now, when I come to look at the news, there's the top news, right? And the news here is so elaborate, you'll start to understand why some of the traders have 5 or 6 screens. And it's not about being fancy or, showing off to your mates. It's about actually being able to see everything at once without changing screens. Excuse me. So like I would have here, and I've got a few things duplicated on this, right? So I've got the markets here, okay, top news, global markets. On this page, okay, I've just got foreign exchange. So I can have a quick look here. All I'm looking for from the news service, and this is what Metastock do quite well, they just tell you what's going on, okay? There can be a few opinion pieces, but when I come to look at the data or the news to catch up on what's going on, I like to just hear what the facts are. Okay, the yen jumped because of this. This is what's happening. Then it will refer to what some of the like the Wall Street Journal's talking about, or articles, and it will give you an overview of exactly what's going on. And you need this, right? You can't be in front of the screens 24/7. So if I see something happening across the board here, and I'm sort of talking about, say for instance, looking at, you know, the yen, like yesterday, I need to find out what's going on in the yen. Now, looking at the price action, if you haven't experienced that before, you may not know that it is the central bank intervening in the market. And the Bank of Japan has been a little bit quiet about it, to be honest. So what you can do there is go, okay, that's great. I need to find out more information. Okay, and that's when you would come back to your news page and you would start to sort of piece together, right, I need to find out what's going on. You get the headline, that's great. You can actually sort of read through that. And then you can even dig a little bit deeper. You can go into regions and you can come down to Japan and the Koreas, and then you'll get a little bit more detail around what's going on here. Okay, yen intervention is a lost cause worth pursuing. Okay, so, you know, the Bank of Japan is just making a statement. They know that they can't drive this thing down forever. It's like holding back the tide, right? And if the US dollar sentiment is up, the dollar yen is just going to go back up. But the important thing is they've drawn a line in the sand and they've let everyone know their intentions, right? So 160, the figure now, becomes the important level. I doubt we'll get back there. We'll get close, that's for sure. So what you can do is you can dig a bit deeper into the opportunity, find out what's going on in the yen, right? And I'll just focus on that for the moment. You can find out all the various news you need to. Then you can actually come back to, you know, use another screen that you've got, okay? And go back to, if I just share that screen again, where am I? Okay, looking at the sort of key screen here, isolate the yen instruments, okay? Really focusing on your charts, on your data, seeing what's moved, how far they've moved, and all these various components, okay? You can still see on a month to date, dollar yen is still up dramatically, right? And I know these are red, it's because I've inverted the yen here. So before you jump up and down, just check that out. Now, what I would be doing there, and this is sort of tying everything together, is coming into my yen template and start to look through and isolate what's going on in the yen. Now, I do get a bit colorful with my charts. I tell you what, sitting in front of the screens for 35 years, I like to see a bit of color in my charts. So I do change them around with the countries. Now, dollar yen, you can easily come through here once again, isolate where you may see shifts in momentum, and you'll be drawing trend lines, right? And funnily enough, when I'm drawing trend lines at the start of the day, or if there's been a shift in market sentiment, I will generally put some music on and just chill out. This is a time not to think. It's just a time to draw trend lines. Once you've drawn the trend lines and you start to see opportunities or a shift in the trend, that's when you can start to really focus, maybe turn your tunes off and start to tune into the market. But I can sort of look across the board here, whether it's dollar yen, I can have a look at all the crosses, and I do have the Ichimoku chart for those traders familiar with the yen. One of our trade tools, the Ichimoku Cloud Trader, will take advantage and execute trades very similar to trend lines, and using strategies like a break trade, a range trade, or a false break trade around using the actual cloud as the execution sort of level, right? Because if you know the cloud, all the Japanese traders follow the cloud. They don't draw trend lines, okay? So that's very important. But once again, isolating the opportunity, it'll enable you to work out the strategy, and then you can sort of piece together where and when to get in and where to get out. All right, you overlay that with good capital management, and then you start to work on a really good trading ecosystem. So just at the top here, I know I'm getting close to the end, with the templates and the markets and a whole range of things, you could talk endlessly for hours, right? Now, my major templates, you got the global markets, I've got the general FX markets, I've got one for equities, stocks, commodities, bonds. Now I've got a whole list of technical charts here. Let me just give you a peek at this one. If I'm looking to sort of do something on my charts, instead of going through all the templates, I've got every instrument up here that I look at, and I'll go through the charts on these, and I've got them all in the 4 time frames, the hourly, daily, weekly, and monthly, to allow me to quickly see and find exactly what's going on, right? So if I see something happening here on, say, dollar Swiss, I can come back into my Swiss charts and or just go straight into this to the Swiss template and then go through all the Swiss crosses. And what I'm trying to do is isolate the best trading opportunity. And what I'm talking about is if we have a very good idea of where the prices are going, you'll know which of those instruments to trade, what strategy to use, and where to get in and where to get out, right? That's what this whole presentation is about. Now, it takes a bit of time to piece that together, but that's what our Financial Markets Trading Masterclass course does, okay? So that's where we are on the general templates. And then obviously you come into looking at the various instruments. You can isolate even specific templates like I was showing you there on Euro, right? Where I actually come back in and really start to drill into the components, not only technically, but fundamentally, and then also overlay the market data. And then you can start to really read the market to see what's going on, where the pressure points are technically, see what instruments are extended, which ones aren't, looking at the ranges, looking at their performance on a, not only on a daily perspective, but on a week, month, and year. It just gives you the freedom to make decisions. And don't forget, as I was saying, the idea of using Metastock, it's to analyze the markets, isolate the best trading opportunities, then drill in, improve your overall probability of success, okay? You can, of course, enhance it with, some moving averages. Some are consistent, some aren't, depending on the market conditions. And that's where you can use indicators at the very end of the day to try and improve your overall probability of success. That's something that I would be encouraging as you develop your skills. And the key part here is about how to trade properly, like, say, the institutional bankers, is understanding the behavior and the impact and the relationship between equities, the currencies, and the bonds in particular, okay? If you understand the relationship between these 3 different financial markets, you'll be able to isolate when the markets are behaving very good, and that gives you confidence to potentially increase your trade size, isolate the best trade, the market's performing well, to get in. At the same time, it will allow you to walk away from the market on the days where the market is discombobulating. You might see a good opportunity and you might think it's good subjectively, but objectively, let the market determine your trading opportunities and where to look, right? That's the most important thing that you need to sort of take away from this, okay? So that's a lot of the information. Now, I was just going to, before I finish up, if I just come back to that main page. Now, I'll just give you a bit of a heads up, and I'm not here to do a massive sell, but just give you a run through our training program, how it sort of basically works, okay? Now, it starts with the introductory free courses, okay? Then it starts on the Financial Markets Trading Masterclass, getting started trading, analyzing the markets and trading the technicals, trading the macro fundamental releases, overlaying that with advanced institutional bank trading strategies. And that's the Trading Masterclass. Now, the key part to this is you need to have your trade station set up properly. We include Metastock, okay, 3-month subscription to get you started, okay, as well as the templates. There's no point you having Metastock without having the templates. You'll get sort of lost in the training. And then from there, you bring it all together with our live trading and coaching, and that's what our accelerator program is. And there's another couple of components there, the special add-on programs, the in-person live trading workshops, and the high-performance trader mentoring. Okay, they're the key aspects. For you guys, for attending or watching the replay, you're going to be able to access the free introductory course, How the Institutional Bankers Trade Forex, right? it'll open your eyes. It is a bit of a lengthy 5-part series, but it will give you more details around how much detail the bankers actually go through, the level of training they have, and the way they look at the markets, how they isolate the best trading opportunities, okay? And basically letting the market determine the trading opportunities. That's what it is, not the data page where I can actually visually see with all the colors exactly what's moving, what's not, and I can isolate various things. Now, I've got a few different takes on this depending on what's happening. As I said, this one here I've got is, it's called Follow the Trail. So instead of looking at all the equity markets and this, that, and the other, I know when specific things, if the US equity futures are kicking into gear, if they are impacting the currencies like on a risk on, risk off sentiment, then I'll know either through the risk on, risk off profile or the safe havens are in play. You basically enable yourself to very easily visually see what's going on, okay, on the markets themselves. Now, I've also got these frameworks set up here for the equities. Okay, if I want to see what's going on in the equity markets, cryptos, I've got a small amount of cryptos there that I would sort of have up as well. And don't forget, the cryptos are behaving like safe havens these days. Okay, when there's panic in the market, cryptos go up, which is a new sort of characteristic. Got the economic monitor so I can see everything that's going on or everything that's coming out. I can get those data releases exactly when I need them. I can see what the central banks are doing, and then you can come back. You can check the volume heat map. You know, this one here, I think is a bit of gloss, okay? Usually we know when the markets are super busy during the European and North American sessions. There are pockets of activity like we saw yesterday when the yen kicked into gear. Why is that important? Well, it can allow you to sort of focus on the instruments that are moving, right? There's no point sitting there and looking at the markets when on instruments where they are not going to move. That's one surefire way to get performance anxiety, frustrated. You're sitting there spending 8 to 10 hours of your day waiting for things to move through the Asian session. Well, I can tell you 9.9 times out of 10, they're not going to move unless there's a big event on, right? So make sure you follow the trail, trade the instruments that are active in the session you are looking at, right? Doesn't mean the correlations don't come into play, but if I'm trading the European session and I'm looking at currencies, for instance, or equities, I'm looking at the European equities and the European currencies, because that's the European economic data is going to impact those. And they are the instruments which are going to move first and will move the furthest, okay? So the heat map is something you can sort of have a look at. I mean, there's something, once you understand the markets, you wouldn't look at that too closely. And I've even got the Hurricane Alley there, right? Sort of geared up for hurricane season. Very important for the oil trade. You can start to sort of piece together where the major storms are. Okay, it may look a bit fancy, but I can tell you what, it does come into play when the oil trade is on. Okay, so these are sort of key templates that even if you are trading, if you want to get hold of these, you can contact our team. But it allows you to see the market as a whole. Okay, and this is going to give you make it easier for you to identify where the prices are most likely going to go, okay? And all of these things fit together, right? Your charts, looking at the daily charts, the hourly charts, whether you're looking at the majors or the global markets, including, say, some currencies, commodities, and equities, or even looking at the risk on, risk off profiles, okay? You can look at specific instruments for those as well. All right, now let me just check my alerts. Okay, we still haven't been triggered here on the alerts. Looks like the markets have really sort of quietened down. If I can just get back onto the right screen. This is something you should be doing. If you've got Metastock, you should actually be sort of using these. Now, once again, just to show you how to get this up, if you just click on right click on an instrument, come down to set alert, okay, and then come through and isolate the instrument. Whether it's Kiwi, you can change all the various characteristics. You can get alerts loads of times. You can set it up for yourself, get your email. This is a tool, as I said, if you want to take control of your day and don't spend endless hours in front of your screens, use this tool. It'll make things easier for you, because when you need to make trading decisions, you can set the levels, and that's when you come back to your charts or you start to look at the price action then, okay? It's a great tool that all traders should be using. All right. Is that us done, Bobby?
All right. Yeah, fantastic. Thanks, Brad. Very interesting stuff. I really like what you're able to do inside of the platform. You have a different approach versus a lot of others that I work with, but I like it. It makes a lot of sense. I really like the workspaces that you've put together. I mean, I can tell that there's years of experience and effort that go into these. I know I've also helped you update them over the years, and they've just kind of improved further. One thing to kind of mention, just real quickly. So this is primarily our Metastock Zenith service. So the Metastock charting is kind of what we've been using in some of the other presentations today. And this is the Metastock Zenith side, which is like the news and fundamentals and financials and everything inside of here. And this is what powers our Metastock real-time software as well. So if you had Metastock real-time, you would also have this Zenith service that has everything that Brad's been demonstrating. So great stuff in there. We do have like some download files in order to access these workspaces, and he actually has a few of them set up where the only way you can get some of the information is if you've signed up through him to get these workspaces that he has saved. So really great stuff there. And yeah, kind of as you mentioned, you do have that like training program, and you give them 3 months access to this too. What was the link? Or sorry, did you share a link for that so that we can share it in the chat room if anyone wants to get that?
Actually, if you come to the website, you can actually we've set the link up on the website. So you can access the page here, and the guys will either set you up, or you can just come quickly if you needed to. Put the link in there. Is it? I'm not sure where I'm putting that. But basically, the free training, traderstraders.com free training. We've set this page up so you can actually come into this. You put your details in, and you will get immediate access to the introductory course, which is the 5-part series on how the institutional bankers trade Forex.
Fantastic. Yeah. Greg, our marketing guy, he put that in the chat, so you guys can click on it in there as well. Perfect. Yeah. Thanks, Brad. You did a great job. And, you know, I'll be in touch real soon here so we can kind of work a little bit farther on some of the things we've been doing together. And, you know, I'm hoping we get a few more signups here too for this service. I think it's a fantastic service for people to be able to take advantage of. So that's great.
I was just going to say, just to finish, just for those traders who are looking at the alerts, this is it. I set up some previously, and you can see the alerts coming through. Okay, so this is, as I said, this is like it in play. So it's not just a gimmick. This is a great tool to use, and you will get alerts. Take control of your trading day, traders, and do not sit in front of your screens all day. You know when to trade, what strategy to use, and when to get in and out. We'll look forward to working with you. All right, Bobby, appreciate the time, mate. It's been another good session.
Yeah, fantastic. Thanks, Brad. You have a good rest of your day.
Cheers, mate.
Cheers. All right, guys. Let me kind of get my things put together here, make myself the presenter really quick. Oh, perfect. I see Brad also shared the link in chat here, and we've got it on YouTube. All right, so next up, we've got Daryl Guppy. Daryl, hey, I see you just clicked on the monitor. How are you doing this morning?
Not too bad there, Bobby. Yourself? You must be pretty tired at the end of all of this.
Yeah, it's your morning and it's my evening. But, you know, I really enjoy these sessions. I like when we get to do these multi-speaker events. And, you know, I try to pull a little bit from every single speaker, and it's always very informational And I know I enjoy it, and so I think the viewers enjoy it as well. Yeah, here, let me get back to my screen. I'm going to make you the presenter in just one moment here.
Okay.
All right, so that was Brad. If you needed help getting set up, of course, with Metastock or with the Metastock Zenith, we do offer free support for that, guys. You can just go to his website, the link that he shared. We also have a link to get a 3-month trial that he offers at metastock.com/T4T 3-for-1, or just go to our sales chat and they can help you out in there. With all of that, next we got Daryl. I almost want to say he needs no introduction from anybody in Australia. As soon as his webcam comes on and you see that mustache, you know you're in for a real good session here. The trademark, if you will. And Daryl, I've had the opportunity to meet you in person as well, and I feel like that's actually probably one of the most informational little meetings and sessions, a nice little drink and everything that we had, and just hearing you kind of talk about the markets was fantastic, and I'm excited to see what you have to share with us today, because I know you're always kind of updating your talks and you're always kind of real current with things. So interested in what you're going to do here. And with that said, I guess I'll just get out of the way. Now I'm just rambling on. Let me make you the presenter here. All right, you should have a pop-up.
Show my screen, yes. Okay.
Yeah. I'll ask
can you confirm that you can see my screen?
Yeah, so I see the selecting and trading hot sectors.
Yep, that's the one we want.
Perfect. Okay. I'll be here in the background if you need help with anything, but you can take it from here.
Okay, thank you very much. And good morning to everybody who's tuned in. One of the most frequent questions I get is how do you select what stocks to trade? And my focus today is on stocks, not on foreign currency. That's a different environment altogether. So when we come to stock trading, normal, standard, run-of-the-mill equity trading, we bring some different ideas to the market. But the key question that I'm asked often is how do we, first of all, select hot sectors, because we think that they're going to perform better than anything else, and how do we select the individual stocks within those sectors? So today I want to try and look at that in a little bit more detail. So there are 6 areas that we're going to try and cover between now and 9:30. First is the strategy and strategic analysis, because we can't select hot sectors unless we understand what the market is doing. But sometimes the reaction to those strategic factors isn't quite what we expect. So we have to be very careful about saying, this is the strategy, this is the analysis, and this is the way we work it out. We have to be aware of reactions that don't match what we anticipate and be prepared to act accordingly. Part of that is relating to crowd behavior, and particularly its relationship with artificial intelligence and the way that that is beginning to impact the markets. Hot sectors are dominated by tips. Now, the tips might come from the back page of the newspaper's financial section. They might come from your broker, your next door neighbour, not so frequently these days as money is tight. They'll come from managed funds. They'll come from a variety of sources. So we need to work out how to assess those and to identify those which contribute to genuine opportunity. Putting all of that analysis into action requires what I call the pillars of trading, and there's 3 of them that are involved in that. And then we'll look at some volatility solutions, because the reality is in hot tips, hot sectors, whatever you're trading, if you don't have volatility, if you don't have price movement, then you're not going to be able to trade. So how we measure volatility, and there are several methods of doing that, becomes critical for how the trade actually develops and succeeds or fails, as the case may be. So index strategy. Index strategy is the strategic index analysis. It provides a framework for every trade that you take, It's telling you whether you are trading in the direction of the market or against the direction of the market. So currently, we're in a relatively bullish market. Market's going up. So are we going to trade stocks that are moving down and developing a breakout? In that case, we are moving against the direction of the market, hoping that they'll catch up. Or are we going to continue to trade stocks that are moving up already in well-established trends? The strategic index analysis provides the environment of what you intend to do. And you need to know in advance, are you pushing against the general market behavior, or are you going in the same direction as the market behavior? Now, the answer might sound as if it's obvious, but not always so. Let's take the S&P and the Nasdaq. Both indexes are already showing signs of rolling over, developing significant changes in trend that may be leading into a fairly substantial retreat. So what do we want to do? Do we want to trade in the direction of the market, which is still broadly bullish, or do we want to trade counter to that and start going short in that environment? Or alternatively, do we believe that that pullback in the Nasdaq and S&P is relatively temporary, and therefore we want to trade against that direction of the market, against the current direction of the market, and go long? So it's not just as simple as saying, yep, the strategic framework says the market's going up, therefore I will trade long. There are other options that come into place. And from that, we need to build a stock pool. And a stock pool is simply a collection of stocks that we're going to subject to closer analysis. How big that stock pool is, how you construct it, varies from individual to individual. The trap is that some of us will spend an inordinate amount of time trying to construct that stock pool. My objective is to scan the market using Metastock exploration, to scan the market looking for a particular set of features and to narrow down that stock pool, to make it as small as possible, as quickly as possible. Our preference is to use the Metastock exploration tools to do this. And we'll set up a variety of standard searches that we use in current market conditions. But of course, you can select a stock pool from reports in newspapers, from information from other sources that you have found reliable or trustworthy. It doesn't really matter how you do it. What's important is that as quickly as possible, you end up with a small number of stocks which you can subject to much heavier analysis. You simply don't have time to analyze every stock in the market. And as the previous presentation said, you wait for particular sets of opportunities. Your job is to search for those opportunities. So understanding the market, the strategic environment of the market, up, down, sideways, volatile or whatever, is part of what allows you to build a stock pool. But how do we find hot sectors? Because in the hot sectors, we should find stocks that are outperforming the broader market behavior. And that's what we want. Features of strategic analysis in the current environment, they're relatively simple in the sense that we're looking at high levels of inflation. That has a broader impact on the market. We're looking at the impact that presidential candidate Trump is having on American politics and the way that Biden is reacting to that. We're looking at the major factors that are influencing economic conditions, not market conditions. Even if we are a pure technical analyst, which is what I prefer to do, we simply cannot ignore what is happening in the broader market. What we have to do is understand that broader market behavior and allow us to drill down to individual stocks or sectors that are going to benefit most from that environment. So in an inflationary environment, we'll look for those companies that have pricing elasticity. In other words, they can keep on increasing prices because we've got no choice about having to buy them. Supermarkets are the good current example. And yes, it edges over into price gouging, but from a trading perspective, a company like that is able to survive in an inflationary environment presents a good potential trading opportunity or investment opportunity. The other key factor to remember from this style of analysis is to look at the distribution or flow of money into the market. Times are tight. People do not have spare money. We talk about the cost of living crisis. One of the first things to go in terms of discretionary expenditure in a cost of living crisis is money into the market. It tells us that there is less money flowing into the market, number one. Number two, there is less speculative money flowing into the market. That means that capital flows into the market are declining. It means the sorts of opportunities that we're looking for are becoming, in many ways, more limited. But paradoxically, because that time is tight, because that discretionary money is limited, there is a move towards more speculative instruments, currencies, cryptocurrency, speculative stocks in the Australian market in that mid-cap range or even lower. Why? Because I've only got a small amount of money and I want to generate a return as quickly as possible. And although we shouldn't like to use the term, it is a gambling approach. We want a big return for a small amount of money. And this influences the sectors that we establish as hot sectors or hot stocks within those sectors. We can't ignore that broader economic condition when it comes to identifying the trading opportunities that we're looking for. So we look at our strategic analysis, and yours will be different from mine. You will put a different weighting on Trump's influence on the American market, on the inflation's impact in Australia or elsewhere. We anticipate a strategic reaction to that analysis. We anticipate a market reaction to the inflationary environment. But often, our reaction doesn't work as we expect. So let's take a couple of simple examples. Oil, wonderful things. Oil prices going up. Read the newspapers. It's going up because of what's happening in Ukraine or because of what's happening in Gaza or what's happening elsewhere in the world. So what we expect to see with the Russian invasion of Ukraine is an increase in the price of oil, and that developed. But then oil price dropped off dramatically. The Israeli attack on Gaza, we saw a modest increase in the price of oil. It was only from the bottom of its well-established trading band to the top of its well-established trading band. It's currently gone back up to the top of that band. We're not seeing this vast run that took place when Russia invaded Ukraine. So we need to verify that our strategic analysis is leading to the reactions that we expect. Of course, the media will identify hot sectors for us. And the hottest of all hot sectors, theoretically at the moment, is rare earths. So anything that's got lithium in it or tantalum or some other rare earth, and we're into a hot market sector. Hot sectors are important, but the sector carries with it individual company risk. And we need to have a better understanding of the hot sectors. Here's a table of rare earths. Rare earths are a term, they're not a reality. Rare earths, like lithium, are not as rare as we like to think they are. Rare earths, lithium, is quite common. It's widely distributed through most of the mineral sands environments. We have lots and lots of mineral sands. It's rare in the sense that the concentrations of that mineral, of lithium, is relatively low with any bulk tonnage. So when we talk about gold, for instance, we can talk about running at 3 to 5 or 10 or 15 grams to the ton as being a mineable asset. We're talking rare earth, we're talking much lower quantities per ton That's what makes it rare, not its distribution. So the result is that even though we can be looking at a hot sector, we still get trapped with individual company risk. Both of these charts, the one that's falling heavily from the left to the right, and the one that's rising beautifully from the left to the right, both of these are lithium miners. Both of these are in a hot sector, but the individual company behavior is very, very different. We can't get away from our broad understanding of the market, the economy, what we think will happen, our assessment of politics. All of that sits in the background. We can't escape that. Some people will give more emphasis to that than others. But when we're coming to trading, to looking at hot stocks and hot sectors, we have to come back to the individual chart to assess whether the behavior that we're seeing on the chart verifies or is consistent with our strategic analysis of what we think is happening in the market. And if there is a difference between what we expect and what we see, then we have no choice from a trading perspective. We have to trade what we see on the chart, because what we're on about is not prediction. It's not about reading the tea leaves. It's not about predicting what's going to happen in the future. We're looking for that balance of probabilities. Now, most of you, I imagine, will not be able to read the tea leaves sitting in the bottom of the teacup. Of course, it's Chinese. It says G.O.A.T. It means opportunity. So when I look at the market, when I look at the charts, what I'm looking for is opportunity. Not necessarily so important as to whether that opportunity exists in what I think is a hot sector or what I think is a hot stock. The opportunity comes from what I'm seeing on the chart behavior. So the most important thing is, yes, we need a strategy and strategic analysis. We need to understand what's happening in the general market using an index analysis to decide that. Then we need to check that the reaction of individual stocks that we're looking at in those selected sectors matches our expectations. In a hot sector, we expect those stocks to be rising. Just because a stock is in a hot sector doesn't mean it's going to behave in that way. Some stocks will be falling, some will be rising. It depends on individual company risk, irrespective of the sector that it's involved in. So despite the levels of analysis we do, and some people spend a lot of time on that, it's not about prediction. It's about understanding behavior. And crowd behavior increasingly is being impacted by social media, by artificial intelligence. Now, I know that that sounds like an oxymoron. How can social media have artificial intelligence? But some of the discussions that are being generated on social media are driven by artificial intelligence. Does that mean we lose? Does it mean that the market or artificial intelligence is smarter than I am? I hope not, otherwise I've got a bit of a problem. What we're trying to track, once we start to narrow down a stock, is crowd behavior. How is the crowd reacting in the sector or the segment that we've identified? So what we're searching for is price moves. Let me say that again. What we are searching for is price moves. I'm not looking for a sleeping giant. I'm not looking for a gem that has not been discovered by anyone else, and I'm the first there. What I'm looking for is stocks that have already attracted a crowd who are in the process of causing price changes. Now, the price change I'm looking for, because my preference is to trade from the long side, buy low and sell high, I'm looking for crowds coming into a stock that are going to drive that price higher, either in a short-term rally or as part of a longer-term trend. This is my first step in building a stock pool. I might start with a hot sector and look at all the stocks in that particular sector, narrow it down that way. Or I might use a Metastock search and look for particular behaviours and relationships between price and volume to establish how the crowd is behaving, because it's the crowd that I'm trading with. Unless there is someone prepared to take the other side of my trade when I buy, or the other side of my trade when I sell, then I can't execute my strategies. And that leads us to an important change in the market, and it's being emphasised even more by what's happening with social media and artificial intelligence. We need to throw out some ideas that are more than 100 years old. The most important of these is the relationship between price and volume. The traditional, the classic interpretation, Edwards and McGee, all of those old writers, tells us that price follows volume. The idea was, when the market was small, that you could see increases in volume as the professional investors came into the market, and that you could follow that volume increase. Price would follow the volume. It's an idea we need to throw out. It's as ancient as the photograph. What happens now is that volume chases price. Remember, what we're looking for is a hot sector. A hot sector is defined by increases in price activity, not volume activity. How do we trade the market? How do we explore the market? Those people who are reading my newsletters understand that what we have is a number of Metastock explorations that look specifically for price behavior. One exploration at the moment looks for stocks that have increased by more than 10% over the last 5-day trading period. We also narrowed down the sector of the market that we're looking at, stocks trading between 30 cents and $2. We know that lots and lots of other people are doing it. That what gets picked up in social media is, this stock went up 10% today. This stock went up 20% today. This stock's up 30% over the week. That's what people are looking for. They're looking for the price moves. They're looking for changes in price activity, because that's the stock they want to join tomorrow. That's the stock they want to buy. What we see is a reversal of the classic idea of price following volume. So now we have a situation where volume chases price, and identifying price is really, really easy. It's a standard, easy to program search in Metastock. We are looking for momentum continuation. Now, as you might have gathered, there's a bit of a drift taking place here. I've stopped talking about hot sectors. I've stopped talking about how strategic analysis helps us to identify a stop sector. I've stopped talking about how lithium, rare earths, or some other feature identifies a hot sector. What I'm interested now in is how price identifies a hot sector, irrespective of which particular sector that opportunity lies in. So here's our search formulas. You can take screenshots of this, they're readily available, and we print these each week in our newsletter as we look at it as well. So what we're looking for here is the weekly increase in price. And we look at only those stocks that have increased more than 10% in the last week. Now, obviously, I've cherry-picked the best examples out of a recent search. But the point that I want to establish is that once price begins to show an increase, each of these is 10% during the week, then there is a good probability, subject to other methods of analysis and stock selection, which we'll look at in a moment, there's a good probability that that momentum will continue. In this case, a 47% return over the next 5 or 6 days, 26% return in 2 or 3 days, 52% return in 5 days, a 32% return over 6 days, and a 37% return over 4 days. 47, 26, 52, 32, 37.5% returns. These are from equity trades. They're not in a hot sector, but they are hot stocks. They're not hot stocks identified through fundamental analysis. They're not hot stocks identified within hot sectors. They are hot price movements. And we anticipate, we expect that others will also be looking at these price movements, maybe not here, maybe up here, maybe here. And they will come into the market in an attempt to pick up the continuation of those moves. This is the way that we are finding hot stocks in our current market situation, not by volume, but by price behavior, and then subjecting that to additional analysis. So why does it increase 47% or 52% or 37%? Part of it, not all of it, part of it comes down to artificial intelligence, because artificial intelligence leads to genuine stupidity. Social media is becoming a significant player in identifying stocks that the crowd will follow. It used to be websites like Hot Copper, for argument's sake, where people would gather, smaller groups, and talk about individual stocks. And we know that some of those stock hosting sites were a home to pump and dump environments, where stock would be talked up by a small group of people, buyers would come in, and then the original movers would dump that stock. It's illegal market manipulation. And it was one of the problems with stock forums and stock chat rooms that the regulators became concerned with. Now it's different. Now we have artificial intelligence working on social media. The people who are generally following social media and using it as a basis to buy or sell or to make investment decisions are relatively inexperienced. If they had any more experience, they wouldn't be using social media. So it's a logical conclusion. De facto, we can assume that the crowd that is attracted to stocks recommended in social media chat rooms and broader discussions are going to be less skilled, less informed than those who are following chat room forums, particularly dedicated to market behaviours and discussion, or to those who are making other decisions using their own analysis in relation to the market. So we've got a crowd. That's the important thing. And we've got some choices. We can decide to buy with the crowd. We can decide that as the crowd piles into this stock or to this stock, that we can buy with them. And we can ride that behavior. Because remember, volume follows price. Or alternatively, and if we're lucky, we can decide to sell into that crowd. So what happens here? The crowd identifies this stock after it's made 26%, or the stock at this point here. As the crowd begins to pile in to the stock at this level, we see an increase in volume. And yes, we may get a continued increase in price, but that increase in volume gives us the opportunity, if we're bought in here, to sell into that crowd. So we can decide with this artificial intelligence driven behavior to be buyers and join that group. Hopefully, we're more intelligent than the group, so we know when to get out, but they don't. Or if we already own the stock, we can sell into that group because we'll have plenty of buyers prepared to buy the stock that we hold. The key factor, we can treat the impact of artificial intelligence in the same way that we would treat any crowd behavior. In many ways, social media and the impact of artificial intelligence on the way that social media discussions take place and the way that it spreads, they're useful idiots, as someone might say. They provide price momentum that is not based on sound analysis, and at times price momentum which may completely ignore any fundamentals. Key factor, it doesn't really matter why a particular stock price is moving. The hot stock, by virtue of the fact that it's hot, means it has attracted a high level of trading activity. People are bidding for it and outbidding for it. That's what's driving the momentum. Why do we think that our methods of identifying these stocks are effective? Well, there's two reasons. One, because we consistently are able to identify through further analysis those stocks that are going to deliver these types of returns as the crowd chases price. Experts that provide tips are far less successful in the current market conditions. Now, we've already always held a level of disrespect for the investment industry because they have conflicted advice. They're trying to make money out of the trading action that you take. So, of course, their advice is always conflicted. And their focus is on matching benchmarks. But even then, they're not that good. More than 75% of Australia's large cap equity fund managers underperformed the ASX 2000 benchmark in 2023. Think about that a bit more carefully. More than 75% of the big fund managers, the large cap equity fund managers, underperformed the ASX 200. They didn't even match the performance. They underperformed. And underperformed by substantial amounts as well. Two of them underperformed by, I can't read it, it's covered up. 6 underperformed by 30%, 4 underperformed by 40%, 3 underperformed the market by 75%. They simply could have bought an ETF that covered the index, and at least then they would have matched the index behavior. So taking tips from experts is always a bit of an issue. Yes, they've done the fundamental research. Yes, they've looked at a whole range of other factors. That's great. But what they provide is a starting point. They provide a stock pool that you can subject to further analysis. Because tips, the problem with tips in terms of hot sectors, the horse has usually bolted by the time we find out. When we see a hot tip in the market, it's already started to develop. So we need to find better methods, better opportunities, better ways of identifying those opportunities before the horse has bolted. Volume doesn't give us the guide. My argument is that price activity, price movement gives us the early warning. That is the best tip that's available in the market. So how do we do it? We need to find the opportunities that we like. The market's full of opportunities, more opportunities than we can possibly trade. But it's not like walking in a casino in Melbourne or Sydney or anywhere in Australia where there are multiple screens running around, flashing lights and all the rest of it. We need to be much more organised. And there are two essential types of opportunity that we need to look at. The first is the mid-trend opportunity. The trend is already established, the breakout's established, and then there's a pullback. Do we enter here in anticipation of this uptrend continuing? Some people, some traders, are particularly good and particularly comfortable with this type of entry. The other is the standard breakout entry. And here we can use a, I don't know who placed that trend line there. That's not in the right position. That's a terrible trend line. What we're looking for is a breakout opportunity. And the trend line, which should have been down through here, and for some reason it has slipped up on this screenshot, gave us an early signal here, a confirmation signal, in this case with the Guppy multiple moving average. So our buy signal is as the breakout is confirmed, and we can have a higher level of confidence that this is likely to develop into an uptrend. From my perspective, this is where I like to trade. At heart, I'm a breakout trader. I don't feel so comfortable entering in mid-trend enter points. Whenever I do it, it seems to keep on falling. I don't have a good success rate in this area. Breakouts, I'm a little bit more adventurous. I prefer these. So the question becomes, over time, we know what types of opportunities we prefer to trade, and we know what types of opportunities we can successfully trade. And hopefully, what we prefer to trade is what is successful. Not always the case. Sometimes we find that we prefer to trade a particular type of stock, but we're not very successful at it. So matching success with preference is important. So when we've got our stock pool brought together, our hot stocks, then we look for the type of opportunity that we know from experience we can trade successfully. So the pillars of success, having made that selection, the pillars of success depend on our stop loss condition. It depends on how we set our profit stop, in other words, how we set our stop as the market begins to develop as we anticipate. And the exception to that is pattern targets. I'm going to go through these three fairly quickly because the fundamental thing that underpins all of this is the 2% rule. I call it the Guppy 2% rule, but it's a standard rule within the market. And that is that the risk in a trade should not be more than 2% of total trading capital. It's a simple rule. It is one of the most widely misunderstood rules in the market. Consider this. Each of these losses is $2,000. We have a trading capital of $100,000. So a $2,000 loss is 2% of our trading capital. If we got a 10K trade, then a 2% loss, a $2,000 loss, sorry, we've got $10,000 in the position, we lose $2,000 and get out. So we've lost 2% of total trading capital, but we've lost 20% on that individual trade. That's acceptable. It's acceptable because that $2,000 loss is still only 2% of total trade capital. If we got a $20,000 trade, that $2,000 loss is 10%. If we got a $30,000 trade, it's only 6%. If we're taking a $40,000 position, then a $2,000 loss is only 5%. Most people look at this figure and say, oh, I can't afford more than a 5% loss on the trade, even though I'm only trading $10,000. This is not important. What's important is the 2% figure of your total trading capital. This is the true magic of the market. It makes a 20% loss, this trade, equal to only 2% of your total trading capital. That allows you to survive. And of course, we can manipulate that 2% figure. 2% is the maximum. We have most success in managing our trades if we use logical stop loss levels rather than the financially calculated levels. But I want to move on a little bit faster. Okay, maybe we won't. Here's our financial stop loss, and it's set at $4.50. That would be our position size. But if our logical stop loss at $4.75, because that's based on the logical stop loss level, or support or resistance level, then we can still keep the same 2% loss of portfolio capital and increase our position size because our logical stop loss level is higher than our theoretical financial stop loss level. Or we can choose to keep the same position size as the financial calculations, and that actually reduces our portfolio risk to 1%. So the manipulation of our position size based on the logical stop loss level will determine or reduce our risk in the trade. Price volatility is the key to being able to manage the trade. Anyone can make an entry. It's how we manage the trade as it develops that will determine if we are successful. There are several ways of managing price volatility. And I'm going to go through them very, very quickly because we're running a little bit out of time. Our preference, of course, is to use the countback line. Just simple calculation. You take the highest high in the current trend, you go to the bottom of that candle, cross to the left to the next lowest low, across to the left to the next lowest low. You ignore gaps, you ignore equal highs. This is covered in all of my books, all of my discussion. The key point I want to establish here is that the countback line is a self-adjusting volatility measure. Now that's important. We don't decide in advance how many days we're going to use in the countback line calculation. What we decide is the number of significant days, and that's calculated by lower lows. In this case, we're not counting back 3 bars. In this case, 3 significant lows is 1, 2, 3, 4, 5, 6 days in the calculation. Whereas here, from this high to this low to this low, it's only 3 days. So 3 days is the minimum period for the calculation, but it can be 6 or 7 or 8 or 10 days. This is why we say the countback line is self-adjusting for volatility. Remember, we're trading momentum. And as that price rises, we want to continue to move a protect profit stop behind the price activity so that when we get a close below that level, safe place here, there's a pretty high probability that that's our exit. We can also use an average true range calculation, and this is a new tool that's available in Metastock. So what we're doing here is we're taking the average true range calculation, the value over 14 days, and setting that value below the closing price in the rising trend. As you can see, this is a stepped ladder, same as the countback line. So if the value is larger, we just simply move the line horizontally to the right. Same principle. A close below this line, there's a high probability that this uptrend is finished and we exit. But what's the difference? The difference is that we need to predetermine the calculation values. This is a 14-day calculation. We could change it to 7. We could push it out to 21. and the positioning of the value would be different. But what's important is that we must make an a priori, a before the fact decision about how many days we think are suitable for the volatility measure of this price movement. And if we get it wrong, we will get false signals. This is the way that you apply in Metastock. Simply go down and look for traders ATR long. Again, I'm not going to explain this in great detail due to time constraints. What we can do in managing that trade, that hot trade, it's not the sector, it's the trade itself, is combining two measures of price volatility. In this case, the countback line and the CBL line, sorry, and the ATR line. The red one's the ATR, the blue is the countback line. If we get an exit signal below the highest of these positions, let's say here, below the countback line, then we would wait for verification with a close below the ATR line. The important thing to remember is that we can only play around with our exit if we are already sitting on a substantial profit. If we're not sitting on profit, we can't do this, because in making this decision to use the countback line as a trigger and the ATR line as a confirmation, all we're putting at risk is a certain level of profit. Of course, these relationships may change. In this situation, the value of the ATR line is higher than the countback line. So the ATR line here would become our trigger, and our countback line would become our confirmation signal. Another way to measure price volatility is parabolic stop and reverse, parabolic SAR. This is useful for short-term trading. We find that it shakes us out of trades too often. In other words, it gives a range of false signals. I include it because countback line, ATR line, parabolic SAR are all a method for measuring price volatility. But I also want to understand trend volatility. And for trend volatility, I'm going to use the G.O.A.T multiple moving average. Let me go back 1 point. With countback line, ATR line, parabolic SAR, they are all designed to track price volatility behavior from the point where price begins to move in an uptrend or a downtrend, as the case may be. When I'm tracking trend volatility, I'm tracking my exposure to the trend. And my exposure to the trend will depend entirely on the point of entry that I make to the trend. So here's my entry point. It's after the trend has started. And based on my entry point, here is my calculated stop loss. In this case, it uses a countback line as the initial calculation. And we project this line to the right-hand side. Once this line intersects the 60-day moving average, we project the line vertically to the value of the 30-day moving average. We call this the amplitude of the trend. This is the new stop loss level. How many days should that stop loss be valid for? How long is the duration of that stop loss? And we determine that by drawing a horizontal line from the 30-day moving average to the 60-day moving average. Once that line hits the 60-day moving average, we project the line upwards. So we have this constant pattern of amplitude, how high should we lift the stop loss, duration, how many days should that stop loss stay in place, amplitude, duration, amplitude, duration. It's a repeated process based on the values of the long-term G.O.A.T multiple moving average. It tells us about the volatility of the trend, not the volatility of price, but the volatility of trend. Measuring price volatility is an important way of managing the trade. We can confirm those exits by also using trend volatility. Here, we can see it surrenders a great deal more profit. But in a long-term trade, that turns into a potential longer-term investment. It may be suitable to use the trend volatility measure to determine when we get out of the trade. Understanding price volatility and trend volatility is one of the ways in which we can manage the trade behavior. Remember, we started off with 6 issues to look at in terms of the market. And that is first, strategy and strategic analysis. The reactions to strategy, whether it matches what we think it should. How we look at crowd behavior and the impact and relationship in terms of social media and AI. How we assess tips and opportunity. The pillars of the trade, which are essentially stop loss. The volatility solutions that allow us to trade that, which is price volatility and trend volatility. And then there is one exception in setting trade exit targets, and that is pattern trades. And pattern trades essentially depend on us being able to effectively set and draw trend lines. They're simple patterns of lines imposed on the chart. Here, for instance, is an upsloping triangle. A triangle, surprisingly, has 3 sides. Much of the crap you see on social media has triangles with 2 sides. What's important is that the height of the triangle, the base of the triangle is measured, and then that value is projected upwards to give us our target. The important point is we can enter close to the trend line, but we exit at the target level. Sometimes it will exceed the target. Sometimes it will hit the target, twice as it did here, and then retreat. Unlike price momentum, we don't know how, in price momentum, we don't know how high the trade is going to go. In a pattern trade, we have a high reliability target, and we trade this by exiting at the target level. Here's a cup and handle pattern. Measure the depth of the cup, project that depth from the breakout from the handle. There's our target level. We exit at that target level. Pattern trades are the exception, but we must remember to apply it correctly. Cup and handle patterns, use these as an example, are reliable patterns, but they are short-term patterns. This is supposed to be a cup and a handle pattern. Unfortunately, the cup, it's not a proper cup anyway, and it develops over 41 years. And this is a 10-year handle pattern. Well, sorry, I'm interested in trades that develop over 4 to 10 days, not 41 years. This is garbage. This is also the same. This is not a cup, it's a standard trend line breakout. This is not a handle. A handle moves on a downward sloping line. It doesn't take 7 months to develop. It doesn't take 17 months to develop a continuation. Understanding how these patterns develop is really significant because they provide us with high probability short-term trades. So what it boils down to is I want top price performers. I don't want hot sectors. What's important is where the opportunity develops. And that doesn't matter. It could be a hot sector. It could be a cold sector. It could be an unknown sector. I want top price performers. And Metastock gives us simple and effective ways that we can find those hot price performers, and then we can trade them. And we trade them by understanding crowd behavior, which is where the crowd chases price, volume follows price. We can manage those trade developments using price volatility, ATR, count back line, parabolic SAR, and we can use a better understanding of trend volatility using a trend volatility line based on a GMMA. But our success in the long run does not depend on what stocks we select. It depends on how we trade those stocks, and how we trade those stocks successfully depends on our application of a stop loss. I hope that this has given you a better idea of how we're trading in current market conditions, and we explain that each week in detail with contemporaneous examples, not exposed to which stocks they are, that show you how we apply these search techniques, how we manage the trades, how we set our profit targets. I wish you every success in trading. Thank you for your time and attention. Thanks, Bobby.
All right, thanks so much. Yeah, and great work. Way to really end things out strong here. You know, I think you had a good presentation. I liked seeing what you had to go through.
You mean you're still awake at this time of the day? That's excellent.
Yeah. Well, fantastic. Yeah. And yeah, if anyone follows up with any other questions to me, I'll be sure to forward them along where I know they can reach out to you directly.
I should have told you, and I'm sorry I forgot, I'm not good on the advertising stuff. We do have a bonus offer, which is 1 month free access to the newsletter that readers can log on to.
Oh, fantastic. Yeah, we'll post that in the chat, and I can see you still have it up right there. So they can go to guppytraders.com/bonus. We've put that on YouTube as well, so they know that they can reach out there. So yeah, fantastic. Thanks. All right, let's see here. Got everything turned on my end. We've got that listed everywhere. I haven't seen any additional questions come in, so I think that kind of rounds things up. Yeah, as always, thank you for participating, that is. And, you know, I'll be in touch with you in the near future. We have some other events planned that are coming up as well.
Very good.
All right, thanks, Daryl.
Thanks there, Bobby. Cheers.
Yep. All right, everyone. Thanks for you know, joining us today and signing on. I know a lot of you had opted in for some like bonus offers when we first signed up, when you first registered for the event, and we'll be following up to get those offers out to you guys. I know most of the speakers had like a free bonus offer for you. So you can be expecting that within the next few days. If you guys have any additional follow-up questions for us here at Metastock or for any of the speakers, really, you can still reach out to our team and we can get you in touch with the right people. If we can't answer the question ourselves, we do have a fantastic support team available to help with stuff like that. And one of the easiest ways to contact us is in our live chat room, which you can visit at metastock.com/sales chat. And if it's after hours, it'll let you send us an email and we'll get back to you as soon as possible. If you guys were interested in taking advantage of the bundle from today that will give you access to the Market Advantage Toolkit, you'll get super signals, you'll get the Power Bundle 360, all those trading systems from tradingindicators.com, as well as some premium training. We do have a special on that available. You can also access this recording in case you wanted to go back and watch anyone, or if you missed any of the presenters, by visiting metastock.com/summit-savings, and that'll let you sign up for the offers there. And if you have any questions, you can always reach out to me directly as well. That's and my email is just bobby.hiller@metastock.com. And I think that's going to round things up for today. So depending where you are, I hope you have a great rest of your night or a great start to your day. And until next time, everyone, thanks.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us, and keep on trading.